Very good morning, everyone. Welcome back to CA Intermediate Group 1 Accounting Marathon. This is our day 2. On day 1, we've already discussed financial statements, including cash flow statement, profit pre and post incorporation, bonus issue, right issue, redemption of preference shares, insurance claim, and branch accounting. Firstly, we've discussed only till insurance claim. We have not discussed branch. Am I right? This is what we've done. And in today's class, we'll be starting with branch, then to department, then we'll go to hire purchase, investment accounting, redemption of debentures, and income return. Before I start with branch accounting, point that I wanted to make regarding cash flow statement and financial statements, few students came up with couple of doubts. First one, in managerial remuneration question, we did one question wherein we are supposed to compute 1% of the profit as commission. That 1% of profit, should that profit be on net profit as per P&L account, or should that 1% be as per the profit that we computed for the purpose of managerial remuneration money? What we've done in the class is correct. We should be doing it on the profit as per P&L account. Okay? That is because the 1% of the profit that was mentioned in the question that we did in the class is the agreement between the employer and employee. It is not based on the profit as per Companies Act. Profit as per Companies Act is determined at the end, and it's not based on that. It's based on the profit in P&L. So what we've done is absolutely correct. The second point was with regard to cash and cash equivalent computation. We have not read that fixed deposit word correctly. That fixed deposit was for a period longer than 3 months. So because the maturity date was 15th of April and only 15 days was left, no, I've wrongly taken it in cash and cash equivalent. We should not be taking that cash and cash. That one part we've done it wrong in the hasty time that we were trying to do things quick. We've taken it wrongly in cash and cash. That fixed deposit that was there in the question that we did was for a period longer than 3 months. It was not short term. So that is not cash and cash equivalent. And with regard to investments, one more question, when there were current investments, and we've taken it as changes in inventory, sorry, changes in working capital in the topic of cash flow statement. So should we take investments in operating or should we take it in investing? This totally depends on the form and nature of organization. If it is an investing entity, sharing, buying and selling of investments might be operating. However, if it is an if it is investing entity, it will be that way. If it is not an investing entity, then it will be what to say non-operating activity. Getting it? So that depends on the form and nature of organization. Whenever information is not given in the question, whether an entity is financial enterprise or not, we need to make an assumption. The usual assumption is it is not a financial enterprise. It is not an investing company unless they specifically mention. So when they don't give such clear information, if you take a specific item as operating, it would not be wrong. Just need to write a disclaimer saying that in the absence of specific mention, this is assumed to be a financial enterprise or this is assumed to be not a financial enterprise. Either ways will be accepted. But what is recommended to assume is if they don't mention, don't assume it to be financial. Only when they tell, it will be a financial. So in that question, current investments, instead of taking as changes in working capital, you can take it as investing activity also. But this in the modern times, an entity, though it is relating to trading of a specific product or rendering of services, it will still do little bit of trading. Previously, treasury management means entire money was to be kept in fixed deposit and safe deposit or with what to say bills with RBI or government security. Nowadays, they don't do that. In every entity, they'll appoint a separate fund manager. What this guy does is the funds which are not immediately required for the company's business and which will be used required after 6 months or 7 months will not be safely parked. They will play with that money. They will literally play with that money. So, though their core operations is manufacturing a specific product or rendering services, in the new age economy, in the new age industries, they will still do trading as a part of their business activity, though their core business activity is not into trading or investing. Just for a matter of fact for it. So, okay, let's get started with the topic of branch account. Shall we? Branch accounting is a topic which everyone thought will not survive, will not come in the new scheme of education. Everyone thought this will be one chapter which will get removed, but this is a chapter which has survived and which will continue to be there even in the case of new scheme of education. We full-fledgedly. A lot of chapters have a lot of cut, but this chapter will be there full. So when we start talking about branch accounting, for the purpose of accounting in this chapter, branches are classified into two categories based on where they are situated. Number one, inland branches. Number two, foreign branch. Inland branches in the same reporting country where the head office is situated. That is inland branch. If the branch is in a country other than the place where the head office is situated, we call it a foreign branch. We need to segregate it into inland and foreign branch. The reason being, if it is an inland branch, the reporting currency of head office and the branch will be same. If in case it is not an inland branch, the branch is in a foreign country, then the reporting currency will not be followed in the foreign branch. Then what is it that we would have to do? We would have to apply AS11 to convert the branch records to reporting currency. Take it. So the reason why we segregate the branch into inland and foreign is to apply AS11 and to not apply AS11. In fact, in inland branch, there is no need to apply it. Am I right? Talking about inland branches, to apply the accounting, we need to segregate into two categories. One is dependent, other one is independent. Dependent, the word here is much different than how it is in the practical scenario. In a practical world, when we say a dependent branch, that branch is dependent upon the head office for raw material or finished goods. That branch is dependent upon the head office for decision making. That branch is dependent on the head office for banking services. That branch is dependent upon the head office for fixing selling price, taking decisions, fixing financial, what to say, policies, sales policies, and all of that. Meaning, branch on its own cannot procure goods from somebody and then sell. Head office will send the goods. Head office will tell what price to sell. Head office will tell whom to sell. Head office will tell how much discount to give. Head office will give bank details. Everything should be happening as per the instructions of head office. That is what we mean dependent branch. In what? In a practical scenario. In this chapter, what we learn as a dependent branch is not that. In this chapter, when we'll say dependent branch, does the branch have an accountant? If the branch has an accountant who can sit there, pass journal entries, maintain books of accounts, it is not a dependent, it's independent branch. It is independent branch. When we say dependent branch, branch does transactions. Branch doesn't have a full-fledged accountant who can prepare proper journal, ledger, trial balance, prepare final accounts, and then send invoice report to head office. Branch doesn't have accountant. Branch is a small shop where there is one person, he only manufactures, he only sells the goods, he only collects money, he only sweeps the floor, he only closes the shutter, he only opens the shutter, he only does the puja on Friday. He does everything. And he only picks the call if the call is also made. So one whole and sole person or two persons, they only do this. There is no place for an accountant to sit and pass journal. So whatever transactions happen, they'll tell over call or send the bills to head office. Head office only does account. That's what we mean independent. So do you understand the context of dependent branch in a practical world is much different from what we discuss in this chapter. Here we're seeing it only from the perspective of accounting. For the purpose of accounting and maintaining records, is the branch dependent on head office? The answer is yes, it is dependent. It is not dependent on head office. It can maintain its records on its own. It is independent branch. Keeping record of transactions is not accounting. Accounting is not writing only journal or maintaining books. Accounting is writing journal, posting to ledger, preparing trial balance, and also being able to prepare final accounts. Okay, first we'll start with dependent branch. Dependent branch में multiple cases are there, multiple scenarios are there. We'll discuss all of that and then go to independent. For the next 20-30 minutes, we're going to discuss dependent branch. Independent branch, what we have is very less. Foreign branch is even more less. Major part of the chapter is on dependent branch. Major possibility of questions in the examination is on dependent branch. Whenever the branch is dependent, head office is maintaining books of the branch. Head office is maintaining the books of the. When head office maintains the books of the branch, head office can maintain the books of the branch in three broad methods. Number one, debtors method. Number two, stock debtors method. Number three, final accounts method. And other than this, there is plus one called retail price method, or what we call it as wholesale price method. Wholesale retailer type relationship they'll appoint and then try and do. So these four types we need to understand. So what are these? Number one, debtors method. Number two, stock debtors method. Number three, final accounts method. Number four, wholesale price method. All the methods are same. They'll give same answer. Sir, which one to pick? It is left to the convenience of the management of the head office. Head office will decide which method to pick based on certain criteria. Criteria number one, if they treat head office as wholesaler, branch as retailer, then we'll follow wholesale price method. Head office as wholesaler, branch as, they're actually one only. Retailer, wholesaler means there are two different persons. Retailer will book retail profit, wholesaler will book wholesale profit. It is not two different entities. It is one entity, but they will treat branch like a retailer. Then we'll follow wholesale price method. You did something called adjusted selling price method, or did something called retail price method in CA Foundation, chapter 4, valuation of inventory. You used to do one table to compute. Did that? Something similar to that. Or in accounting standard 2, when you did valuation of inventory, also you do something called retail price. Call the name. So that concept is what we apply in this wholesale price. So only retail is a wholesale is a, the one is wholesaler, the other one is obviously retailer. No? So from the perspective of the head office, we call it wholesale price method. From the perspective of the branch, we call it retail price method. Perspective is different. What we do is same to same. Getting it? Then when the goods are sent and it is not treated like wholesale retail, then we can follow three methods: debtor system, stock debtor system, final account. Debtor system, stock debtor system, final account. Under debtors approach, head office will treat branch as a debtor. Head office will treat branch as a debtor. I've given goods to you. You should give me money. Not sold. I've given goods to you. You are like a debtor, not debtor. If you sell your debtor, it is like a sale, and you are like a debtor. So whatever money you owe to me, I'll write as receivable, asset, opening balance debit side, closing balance credit. If you say debtor, to debtor, what do you give? Goods. Here is like debtor. So you give him cash, you give him assets, you give him building, land, plant, machinery, inventory, and you also give him petty cash for expense. These are all the things that you give, no? For against that, you should give us money. We treat like that. Branch is an asset in the form of debtor. So we open debtors account. We open, but we don't write debtor. We'll write branch account. Branch is like our debtor. Everything that we have given to the branch, assets at branch, cash at branch, stock at branch, everything is our asset. We'll write on the debit side opening balance. We'll write on the credit side closing. Further, during there, we gave stock to branch, debit. Branch gave us cash. Branch incurred expense. We don't care. We incurred expense. We write. So transactions are done by branch. Accounting is done by head office. Head office will make entries for such transactions which will affect head office. If the transaction is between branch and third party, head office will not write it. The transaction is between branch and third party, head office will not write any entry. So think, whose records are we keeping? Branch. Who's passing the journal entry? Head office. So when will we write the entry? If it affects head office. The stock is sent to branch. Do we write the entry? Yes. Debtors will increase, so debits. Stock is sold by the branch to customer. No entry. Why? This entry is between branch and customer. Entry is between branch and, if the entry is between branch and customer, head office is not affected. Head office will not get involved. You don't write any entry. You will be like, sir, if we don't write the entry for sales, then how will we identify profit? Very simple. I'll write opening stock. I'll write purchases. I will not write sales. I'll write closing stock at cost. And then I'll find balancing figure here. Sales GP ಎಲ್ಲ ಒಟ್ಟಿಗೆ ಬಂದ್ಬಿಡುತ್ತೆ. Sales ಒಟ್ಟಿಗೆ GP ಸೇರಿಸಿ ಬಂದ್ಬಿಡುತ್ತೆ. What I'm trying. Basically, I'm writing COGS. I'm writing COGS types. So I will write this. I'll write opening balance because I know it. I'll write goods into branch because I know it. I'll write the closing balance. I will not write the transaction between the branch and the customer. Customer paid money to branch. We don't write it. Customer paid money to us. We write it. Like we are. It is though the customer pays the money. It is like branch is paying us. You're getting it? Expense incurred on behalf of the branch by the head office. We'll write it. Expense incurred by the branch. We don't write it. Paid by the branch. We don't write. Why? We write opening balance of cash, closing balance of cash. If we send cash to branch, we'll write it. Automatically, net difference will be expense. It will get affected. So basically, there are several accounts: stock account, cash account, debtors account, expense account. There are several accounts. No, all the accounts we put together and P&L account. Stock only GP we should identify, transfer to P&L. Debtors may bad debts we should identify, transfer to P&L. Cash may expense we should identify, transfer to P&L. We should do everything. No, we'll put all the accounts together. When we put all the accounts together, it is only one account called branch account. So from there is no place to transfer to branch pay. So we ignore such transactions which will affect expense. We write only opening balances, closing balances, and goods sent, cash received, goods received will write. Net balancing figure will become branch profit. This is branch debtor system. This branch debtors is there. No, it is several accounts written together. What accounts? Debtors account, stock account, expense account, cash account, asset account, everything written together. In asset also, what is the entry for depreciation? Usually we write depreciation to asset. We don't write depreciation entry. Branch account we don't write depreciation. We write opening balance of asset. We write closing balance of asset. Net difference will be depreciation automatically affecting our branch profit. ಅರ್ಥ ಆಗ್ತಿದ್ಯಾ? Everything which doesn't affect head office straight away will ignore. All of that together will be our branch profit. This branch debtors account is there, no? If I cut it into several pieces, that will become stock debtors method. Under stock debtors method, I'll prepare stock account, debtors account, cash account, expense account, and then asset account. Every account will open separately. In asset account, I'll find depreciation, transfer to branch PL. In stock account, I'll find gross profit, transfer to PL. In debtors account, discount given to customer, bad debts I'll transfer to PL, expense account I'll transfer expense to PL, and whatever in branch PL we get as profit, that is the same profit that we would get here. Got that? Did you understand difference? And final accounts approach is our usual thing: trading account, P&L account, balance sheet. Treat branch like a separate entity which has purchased goods, which is opening stock, which has closing stock, which has incurred expense, which has paid money, all of that, and we'll write the entries. So this is the mindset that you should have. So I'll quickly revise in 10 seconds what I just told. Three methods to maintain when the branch is dependent: stock system, debtor system, stock debtor system, final account system. Under debtor system, branch is treated as debt. Everything that's given to branch, asset, cash, petty cash, you want to say stock, and fixed assets, everything will be treated as opening balance of the debit, closing balance of the credit. Every transaction that's happening between the head office and the branch will be recorded. Transaction happening between branch and third party will not be. Balancing figure in branch account will be as. If you break that branch debtor account into small parts, each part will be one ledger under stock debtor system. That is stock account, debtor account, cash account, asset account, PL account. Final accounts, we do it as usual, or we do it for a separate entity. Shall you quickly see a question? Before that, I would want you to read this. Quickly run through this. Same thing what I just explained to you now. Just reading, look at me. I can go. Reading, look. Done. Let's go ahead. Journal entries under a debtor system. When the goods are sent to branch, I told you branch is treated like a debtor. Debtor has to pay you money. Branch account debit to goods sent. This goods sent to branch will be deducted from your purchases. So ultimately, the entry is branch account debit to purchase account. Your purchases is decreasing, meaning the stock at the head office is decreasing because it is sent to branch and branch has to pay. Got it? Then the next entry, branch expenses. Expenses have to be incurred at branch. No, if it is paid by head office will tell I have paid expense on behalf of the branch. Branch has to pay money, so branch account debit to cash. Branch owes me money now, right? Next one, if it is paid by the branch, head office will say, boss, I won't write it. I'll write opening balance of cash at branch, closing balance of cash at branch. Difference, whatever expense is there will affect our profit. During the year, if I have sent cash to branch, I will write the entry. What will be the entry? Branch account debit to cash. Why? My cash is decreasing. I have sent money to branch. Branch has to pay me. Liability. Branch is my asset. Asset is increasing. So I'll write branch account debit to cash. If branch pays me some cash, received no cash. Cash account debit to branch. It is like cash collected from data. Like that. If the goods are sold, credit sale, cash sale, doesn't matter. I don't write entry. Why? It is a transaction between the branch and third party. Or if you don't write sale, I will get profit. We don't worry. We'll write opening stock. We'll write goods into branch. We'll write closing stock. So how will we get closing stock? Stock is there. Count and write. Ask the branch. They will tell you, right? In our case, in question, we might have to do working opening stock plus purchase minus sales minus goods destroyed, issued, in transit to ಎಲ್ಲ ಮಾಡಿದ್ರೆ closing stock you get that will put in the branch. But that then collection from debtors. If the collection is made by the branch, we don't write it. Why? It is again transaction between debtor and branch. If in case the debtor gives us money directly, our branch will collect and give us money, then we'll write it. We receive cash, cash account debit. Who gave it? Either a branch gave it or we have received it on behalf of the branch. So if in case there is cash received, entry will be cash account debit to branch account. Before that, we have two more things. If the goods are returned by the branch, we had given the goods to branch, branch returned the goods to us. We'll write the entry ulta. We wrote branch to goods into branch. We'll write goods into branch to branch. Branch doesn't have to pay us money anymore. The money that the branch should pay us will decrease. Got it? And for bad debts, no entry. Why? It is a transaction between branch and debtor. We'll write opening balance of debtor. We'll write closing balance of debtor. Difference, sales, so bad debts, so collection, everything will get adjusted. It will affect P&L ultimately. You getting it? Weird, no? But works. But works. You're still not able to place no journal entry. What is this? But you don't have to mug up all the journal entries. Only remember that transactions affecting head office and branch are recorded. Transactions affecting branch and third party are ignored. Let's start. Branch remits cash over. Cash paid by customer to head office directly, or branch is collecting the cash and paying us. Both the times same entry. Either customers directly pay me the money, or branch collects the money from customer and then pays the money. Same entry. Why? We received from the branch, or we received on behalf of the branch. We have received it from the branch, or we received on behalf of the branch. So either ways, we'll write the entry cash account debit. The money that the branch owes us is reducing because they've given us the money. After that, then goods sent to branch but not reached branch yet. See, I have sent the goods, but it's still in transit. We call this Gita, goods in transit account. If you don't write this Gita account, this stock will become part of closing stock. But it is not in stock with the branch. At the branch in the godown, if you count, it's not there. So just to ensure that it is not part of the closing stock in the branch, we write it as Gita to branch. Call it as Gita to branch. So Gita is asset. Gita is asset. Now in the branch ledger, opening balances will write on the debit side. Stock, asset, cash, petty cash, everything. Closing balance we write on the credit side. In this closing balance, what we write on the credit side? How do we get stock? How do we get? In the branch, how much stock is there? We'll count and write. Or we'll call the branch. They will tell how much stock is there. We'll write. You agree with me? When the branch calls and tells us, in this stock, will this goods in transit be recorded? Why? It is not reached the branch. Why? It is still in transit. Transit and Renantartha. Still coming on the way. Not come yet. Are you getting? If you don't write that, you will not be able to find the correct profit. Right. So what do we do? Closing stock is there. Will not include in closing stock. Just above closing stock, I should write Gita. What should I write? So I'll write Gita to branch. So in branch account, I'll write by Gita. Similarly, we have Sita. What is Sita? Cash in transit. Cash in, see, cash opening balance on the debit side in branch account. Closing balance on the credit side. Right. How do we get to know how much cash is there in the branch? Branch will call and tell this much cash is there, and the head office will write the entry. Now, if sent some cash, it's still in transit. It's not possible right now. Long ago, they used to send the cash physically by way of transportation, or money or something. Now it's not like that. Now I say 10, I'll say, okay, Banta, you call, no? Correct or not? Previously, it used to be like you send after 1 week, they receive. Now, before you send them only, you will call. Now I'm sending money. Okay, now I'm sending. Okay, send, check. Did you get? Like that. No. Today I paid auto fellow. The moment I got on, I paid. Just imagine 7 years ago, 8 years ago, was it like that? No. When the money was sent to you, for you to check whether you got the money, you should take your ATM card, go to bank, go to ATM and then check balance. Or you should go to bank, open for the bank to open and then take your passbook, stand in the queue, give your passbook, edit, update it, then check. Then this used to be there. In the modern times, this Sita Anal is not possible. Sita Anal is not possible. In fact, international fund transfers will happen over a second. If you are doing some international contract and some international client has to pay you money, there they put send, here you receive money. Yeah, withdrawal, if you have not taken RBI permission for certain things beyond a certain 4x percentage, they'll keep it on hold. You need to give the certificate to the bank and then you can do it. But otherwise, it can happen over the quarterly. But let's say there is Sita, cash is still in transit. In the closing balance, what we write, when the branch tells us, will it be returned? No, why it's not there in the branch. But if I don't write that cash, my profit will be wrong. Correct or not? It will be treated wrongly as expense because closing balance doesn't include it. We're finding balance and figure. So above this balance carried on, I'll write to Sita. To Sita. That's it. Sita account to branch. So in branch account, I should write by C. If there is normal loss, abnormal loss, no entry. Or how come? We'll write opening stock, we'll write closing stock. Difference automatically it will get adjusted. Are you getting it? Then insurance claim received by branch. We don't write entry. Why? It is transaction between branch and insurance. If head office is receiving money, we'll write the entry. Cash account, debit to branch account. It's like branch has given. And profit at the branch is found as balancing figure and it is transferred to head office P&L. It is transferred to where? Head office P&L. So this is how your ledger will look. ನಾವು ಆ ಕಡೆ ಕಾಣಿಸ್ತಾ ಇಲ್ವಾ ನಾ ಕಾಣೋದಿಲ್ಲ. Okay, fine. So we'll write opening balances on the debit. Everything. Asset, debtors, petty cash, branch stock. The color, whatever I'm saying. And these assets, closing balance, I'll write credits. During the year, stock is sent. Stock will increase. Cash is given. Petty cash is given for expenses. That will all increase, no? Goods sent, I'll debit. Branch, this is expense of the branch paid by the head office on behalf of the branch. For this, again, the head office has to recover money from the branch. Correct or not? So this is like debtor account. They have to pay money. Receivable is increasing. Debit. And we have given them cash so that they can incur for petty cash expense. Again, that has to be paid by branch to us. Debit. You're getting it? Branch has given us some cash. Branch has sent the goods back to us. These both we will write. Goods and cash we have sent. Branch has not yet received. So that they don't have to give us. Why? It's not reached them yet. So decrease in debtors value. So I'll write here Geeta C. You're getting it? If there is any expense outstanding, opening balance, liability, no. Credit side, closing balance, debit side. If you write this much, balance and figure will be your profit, which will be transferred to head office period. ಸ್ವಲ್ಪ confusing ಆಯ್ತಾ? Consignment account ತರನೇ works like that too. Very much. But there is an agent. Here, this guy is not an agent. This guy is you only. Your branch. Whenever we can't set up branches, we go for consignment. Consignment is much simpler form of business than branch. If you have to set up branch, that place has to be registered in your name. You need to appoint an employee. You need to have an employment contract and then give. Whereas consignment is much simpler. Agent, this time I'll send goods. Next time I won't send. Branch opening is too many things involved. Goods in transit and cash in transit. See, this is like debtor account. Agree with me? There are two ways to know. Okay. Number one, this is like debtor account. Whatever stock you give, whatever assets you give, whatever cash you give, they should give you money. Correct? They have not received this. So much they don't have to give. So decrease in asset. So credit side. One way. The other thing is you have sent cash, it is written here. You have sent goods that you have written here. If you don't decrease it, it should come part of this branch stock here and branch cash here. It is not included in this, no. Why? It is not received by the branch. Correct. So we'll write here separate. In the next period, you know what will happen? Here you will get opening balance. No. In this opening balance of cash only, that Sita will get included. And in this opening balance of stock only, that will get included in the next year. It? The next year there will be no opening Sita Gita. Only closing date pe Sita. In the next year opening, it will get included in cash and it will get included in stock. Got it? Confusing idea putta. That's it. So certain transactions also, whatever might be confusing to you, I put sales made at branch, whether cash or credit, should not be included. We write it. However, it will be used to arrive at closing inventory. To find the closing inventory, we should use this. We should do one working note. That working note you write in the form of ledger, that will become branch stock account under stock debtor system. You getting it? Cash received from debtors or bad debts, discount allowed to debtors. You won't write any entry. You won't write any entry. However, if they don't give closing balance of debtors, you will do one working note. Opening debtors plus credit sale minus bad debts minus discount minus cash received to find closing debtors. There we need it. That plus minus, if you write in the form of ledger, that will become branch debtors account under stock debtor system. Second method. Are you getting it? You might not have done this in class, but any question, the same question what is there in the book can be solved under debtor system, stock debtor system, and final accounts approach, and you'll get the same answer. Usually, what you do, first 4 questions, debtor system. Next 4 questions, stock debtor system. Last 3-4 questions, final accounts. That's not how. Any question in the chapter if you pick. For the same question, we can do debtors, stock debtors, and final accounts. So shall we do one question? So this goods can be sold at, I'll finish off the concept and then this stock what is sent, no, in order to not disclose the cost price, it can be sent at invoice price. Invoice price hege antidare, cost price is here, selling price is here. This much profit, no, everybody gets to know. Why? In the goods, when it is sent, you tell cost of the goods is 10,000. Branch will sell it at 1,50,000. Branch gets to know that head office is making 50,000 profit. So the branch manager can leave the branch, become a competitor. Everyone gets to know the profit. Should you disclose your margins? You never disclose your margin. You never disclose your profit margin. So in order to hide the margin, what we do, there is 100 rupees cost, 150 rupees selling price. You will put one barricade called invoice price, 130 rupees. So whenever I send the goods to branch, I'll write it at 130. So people at branch think that the profit is only 20. Are you getting it? Profit is 20, which is disclosed. 30 rupees not disclosed. Together 50. But in the branch account, if I write opening stock at 130, if I write goods sent to branch at 130, if I write closing stock at 130, profit what I get will be only 20. No, why? Sales will be at 150. Cost is 130. We'll get only 20 profit. But that is wrong. So what do we do? I would have written opening stock 130, closing stock 130 into number of units and goods sent 130. That I can't change. So what do I do? That 130 I should make 100. How do I make 130 as 100? Remove the load on the opposite side. Opening stock which is on the debit, on that load is removed on the credit side. If I write 130 on the debit side opening stock, I write 30 on the credit side. Closing stock, if I write 130, I remove the load on the debit side by writing stock reserve. On the opening and closing stock, we write stock reserve. Opening stock debit, if it is at invoice price, load will be removed on the credit. Closing stock is credit, if it is at invoice price, load will be removed on the debit. Goods sent to branch is debit, if it is at invoice price, load will be removed on the credit. Are you getting it? Sales will be at selling price, we'll get the profit. This opening stock debit, if it is at invoice price, load removal will be on the closing stock will be on the credit. If it is at invoice price, load removal will be on the goods sent to branch is on the debit. If that is at invoice price, load will be removed on the goods sent to branch return will be on the credit. On that load removal will be on the, understood this everyone? Okay. Now opening stock, closing stock would also be there in balance sheet. Would also be there in the balance sheet asset side, stock will be recorded at 130. Wrong, no? In the balance sheet, goods will be recorded invoice price, because of which balance sheet is also wrong, showing wrong position. In the balance sheet, asset side, stock should be 100. You wrote it 130. Asset side totally increased. What will be the impact? Liability side, in the profit, you would have booked 30 rupees profit without even selling the goods. The stock is with you only, no? It is with your own branch, your own stock. Have you sold it? No, cost 100. But you're recording the stock in the balance sheet asset side at 130. Because of it, 30 rupees you have increased, no? Obviously, when you increase the value of stock 30, it will go to profit. Am I right? That's the reason no people play with stock. Correct or not? So what do you do? That profit should be removed. That profit should be. So what do we do? When we remove the value of the stock, we call it stock reserve. What do we call it? We reduce, no, in our branch account. Opening stock is on the debit. We remove on the credit side. That credit we write by stock reserve. Why? So in the balance sheet liability side, we'll write stock reserve 30. If we don't write stock reserve 30, that will get included in reserves and surplus P&L account balance. To the extent of unrealized profit, that is load on the stock, which is left unsold. Understood? We don't have balance sheet here, but I'm just trying to tell you why do we do that. And similarly on the closing stock. That, my friends, is the reason why in our branch account on the opening and the closing stock, load is removed by using the word stock reserve. Load is removed by using the word. However, on the goods sent to branch and goods sent to branch return, we don't write the word stock reserve. We write load on goods sent to branch, load on goods sent to branch return. We use the same name. Let me repeat. Opening stock is on the debit. It is at invoice price. We remove load on the credit. What do you write on the credit side? Stock reserve. Closing stock is on the credit. It should be at cost. If it is at invoice price, load will be removed on the debit. What would I write there? To stock reserve. Goods sent to branch is on the debit. On that, when I remove load credit side, what do I write? By load on goods sent to branch. By load on and goods sent to branch return, this on the credit. If it is at invoice price, I should remove load on it on the debit. What do I write? To load on goods sent to branch return. I won't write what to say stock reserve. Understood this? Okay. Listen to this. Okay. Removal of load on opening stock. Entry is stock reserve account debit to branch. So in branch account, I should write by stock reserve. Credit side. Why? Debit side there is opening stock. Credit side will. See the closing stock. What is the entry? Branch account debit to stock reserve. So debit side I'll write stock reserve. Why? Closing stock is on. With regard to goods sent to branch, entry is branch to goods sent to branch. When the goods are sent, removal of load will be ulta, goods sent to branch. Or I can say load on goods sent to branch. And later that load on goods sent to branch is transferred to goods sent to branch. Why? We reduce goods sent to branch from where? In head office books. Very good. Purchase. From where do we deduct? ಯಾಕೆ ಇಲ್ಲಿ ತೋರಿಸ್ದೆ ಅಲ್ವಾ entry? What is the entry when the goods are sent to branch? Hey, am I discussing too much? Understanding? Branch to goods sent to branch, goods sent to branch to purchase. Correct? I purchased 1,000 rupees worth of goods to sell in my head office. In that 100 rupees worth of goods I've sent to branch. So in my trading account of head office, purchases 1,000, but I'm not selling 1,000. 100 is sent to branch. So 1,000 I should reduce by 100 and write 900 in the order column. Correct or not? Okay, yes sir. Okay, fine. Now tell me, I'll judge you. Okay. From 1,000 you will deduct 100 and then write 900 in the outer column. If it is sent at invoice price, can you deduct 130 from 1,000? No, it will become wrong. So you should deduct only 100. But goods sent to branch is at 130, no? Correct or not? So if you write goods sent to branch at 130, 30 rupees load should be deducted from goods sent to branch. To make goods sent to branch 100. So that from the purchases what we deduct is 100 and not. This everything like you want to hide something. So you did mistake. You remember how much mistake you did and correct so much mistake. So it's like you don't want to tell truth to someone. So you told someone a lie. You remember the lie that you told, and then every time whenever you're telling, you should build up on that lie. You're getting what I'm trying to tell? Because once you lied, you can't step back, no, from that. So ಆಮೇಲೆಲ್ಲ ಆ ಲೈನ justify ಮಾಡ್ಕೊಂಡು ಹೋಗೋದೇ ಆಗ್ತದೆ. Got that? Yeah. So that's this part. And once you're done with that, this is how your ledger will look under invoice price method. Assets you write here, same to same what we've discussed before. Assets closing balance here. Done. And goods are sent to branch here, then goods sent to branch returned. If the cash is spent on expense of the branch, that also has to be recovered here. And if the branch you're sending cash to branch, that also needs to be recovered. So we'll write here. And if the branch has outstanding expenses, liability opening balance here, liability closing balance, then Sita Gita, because it should not be included in closing, we've written it separately. And when the goods are sent to branch but it is returned by the branch, credit side. Done. Now comes the fun part. This stock should have been at cost. It is at invoice price. So I remove load here. This is at invoice price. So we remove load on that here. This goods sent to branch are returned. No, this is at invoice price. On that we remove load here. This closing stock is at invoice price. On that we remove load. See everything yellow. Wait, only the cash what is sent by the branch to head office. Collection from debtors type decrease. Aita? Then you will ultimately find your branch profit balance. Now, should we do one question on this method now and then go to stock debtor, or should I finish stock debtor system, final account system, and then do question? One question madoda? One question. I'll tell you the question number. Question number 1 ಮಾಡೋಣ. Buckingham Brothers. People think branch is redundant, but if you get into a bigger company, they'll have several branches, and then that inter-branch transactions, that reco and all reconciliation, that will be a major part. So practically also very much relevant, because a lot of this inter-branch transactions, adjustment, indebtedness, this unrealized profit, all of these transactions, when they do know, they don't do it in a proper accounting package. They do it in Excel, and then they pass the net effect entry in the books. And when the accounts are made at the end of the period at regular intervals, monthly or quarterly, you would need, say, information records for decision making, MIS records and other. Or whenever you're going for due diligence, or whenever you're going for new investor, they would ask you a lot of questions. So then you don't do those changes in the accounts to answer them. What you do is you make adjustment entries in the Excel, then generate a report to show it to the investor. Okay, come on. Let's quickly start with first one. Should I clear the entire thing and then start the answer from the scratch? If you think that is difficult to you. Question number 3 madbeka. I had put question number 1 here. If I have to do question number 3, then I'd have to open another Excel sheet. Third one madbeka. ಖುಷಿನೇ ನನ್ ಖುಷಿ. ಥರ್ಡ್ ಒನ್ ಮಾಡಿದ್ರೆ ಖುಷಿನಾ? ಫುಲ್ ಖುಷಿ ಅಂತೆ. One moment, I'll open another sheet. If we end up doing this chapter in detail, we might do other chapters slightly less. ಆಯ್ತು ಪುಟ್ಟ, ನಾನು ಹೇಳ್ತಾ ಇದ್ದೀನಿ ಅಲ್ವಾ, if you do something more, you would have to do something less. ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಬೇಡವೇ ಬೇಡ, ಬೇರೆ ಯಾರಿಗಾದ್ರೂ ಬೇಕಂದ್ರೆ. Okay, let's do illustration number 3. Yapi, come to illustration number 3. Let me open the question 5. Some of them don't have no question 5. Everyone has material. Page number 2. Okay. This one. Should I clear the complete answer and then start the answer from the scratch, or show the answer and then mark it yellow? Whatever makes it happy, whatever makes you happy. Mark it yellow. So whatever is not yellow, you should not see. Act like John Disney. Let's start. So XYZ is having a branch in Kolkata. Goods are invoiced to branch at 20% profit on sale. So we'll finish invoice price on this one. So it is sold at 20% profit on sale. So invoice price is 100. Profit, that margin is 20, and then cost is 80. Branch has been instructed to send all the cash daily to head office. Whatever cash they've collected, immediately same day they'll send it to head office. All expenses are paid by head office except petty expenses which are met by branch manager. Is obvious. From the following particulars, prepare accounts. Stock on 1st April 2011 at invoice price, it is 30,000. What is it? 30,000. Opening balance, where do we write? In the stock, in the branch debtors account. Debit side will write opening stock. Branch stock, how much? 30. Shall I do that? Observe here. Branch to balance brought down. Branch stock. Branch stock at invoice price. How much? 30,000. On this, the load has to be removed on the opposite side. Do you agree with me? How much is load? 20% on sale. This is basically our sale price or invoice price in this case. How much will be load? 20% of 30,000. 6,000. I should deduct 6,000 from 30. I can't deduct it in the same side. I'll write it on the opposite side. If it is goods sent to branch, I will write buy load on goods sent to branch. This is opening stock. So what do I write? Stock reserve. So on the credit side, I have written stock reserve. Removal of load on stock, 6,000. Okay, now. It is not profit. It is stock what is there in the branch. We should have recorded at 24. We have increased the price. Now we will decrease it. We recorded a price higher than the cost. We are bringing it back to cost. It is not profit. It is profit only when the goods are sold. It is profit only when the goods are sold. No, it is it is profit when head office gives the goods to branch and the branch sells it to somebody. If I have given the goods to branch, it is not profit. You agree with me? Why? Branch closing stock, it will be there. Branch closing stock is my closing stock. I moved goods from this godown to this godown and then say I made profit. Is it correct? If from that godown, if it goes to customer, I am not telling you it is not profit. It can be. I don't know. I don't know. I don't want to. I don't want to know. Are you getting it? Right, sir. Clear? Shall we read the next line of the question? What is after that? And question always read in the order. Don't read one line here, one line here, one line here, one line here. I will not tell anything. So read the question in one order, solve the answer in one order. Don't do here, there, here, there. Next, sundry debtors, 1st April 2011, 18,000. Opening balance of asset. Where do we write? In our branch account, debit side, two balance brought down. There only will write stock, debtors, cash, petty cash, asset. If there is any other asset, that also there. We will write sundry debtors 18,000. Observe here. Sundry debtors 18,000. Are you getting it? What is after that? Cash in hand. Opening balance. Again, same place, 800. Cash in hand. That is petty cash balance. 800. Okay. Then Api's furniture 3000. Furniture is there in the branch. That is our furniture. Belongs to us. Our asset. Branch has to pay us for that. So again, in the balance, when I write balance brought down, I'll include their office furniture. Very good. Goods invoiced from the head office. Invoice price 1,60,000. What is the entry when the goods are sent to branch? Branch account debit to goods sent to branch. In other words, you have given this much goods to branch. Branch has to pay you money for it. Debtors is increasing. Debit side. What do I write? Two goods sent to branch. But this is at invoice price 1 lakh. Is at invoice price 1 lakh? It should not be at invoice price. It should be at cost. But I already have written at 1,60,000. Accelerate 1,60,000 in the inner column and then deduct load. I'll write on the opposite side. Accelerate stock reserve. No. Stock reserve is only for opening and closing stock. No, what will I write? By load on goods sent to branch. Or you can write by goods sent to branch account only. It's still accepted. Yeah. So I will write here. By goods sent to branch. Removal of how much? 20% on selling price or invoice price. 1,60,000 into 20%. 32,000. Everyone understood? Sure? Can I go further? What is after that? Goods are returned to head office. 2,000. So when we send the goods to branch, we wrote branch account debit to goods sent to branch. When branch sends the goods back to us, we should write goods sent to branch account debit to branch. So in branch account, I should write buy goods sent to branch returned at invoice price 2,000. It should have been recorded at cost. We recorded at invoice price. On this 2,000 which is there on the credit, load will be removed on the debit side. How much is load? 2,000 into 30%. So here I will write, sorry, 20%. Sorry. 2,000 into 20. Sorry, not intention. 400. Okay, na? But then naale class togon naale class ಅಲ್ಲಿ ಇರಬೇಕು. Today when we were doing branch by mistake, I told 30 in the place. No, I can tell. It was not my intention to tell wrong. I would take necessary care that I would not repeat it next time. 1 year ಆಗಿದೆ. Not understand the concept. Cash received from debtors 60,000. When the cash is received from debtors, what is that? It is as good as we receiving the cash from branch. Am I right? Entry will be cash account debit to branch. Sir, no sir, it is received by branch. Why do we rate? They told no, any cash received is immediately sent to head office. Branch has instructed to send all the cash daily to head office. End of the day, cash box mein 1 rupee and 1 lemon bittu ulidella cash they take and they give it to us. Take it. Correct? No, that 1 lemon will be there. Remain. Panshankaraman ದೇವಸ್ಥಾನದಿಂದ ತಗೊಂಬಂದಿಟ್ಟಿರೋದು ಇರೋದಿಲ್ವಾ ಕ್ಯಾಶ್ ಬಾಕ್ಸ್ ಮೇಲೆ ಆಲ್ವೇಸ್ ಯಾ ಮನೆಯಲ್ಲೂ ಇರುತ್ತೆ ನೋಡಿ ಲಾಕರ್ ಅಲ್ಲಿ ಅಮ್ಮನ ಹತ್ರ ಕೀ ಇಸ್ಕೊಂಡು ಸತಿ ನೋಡಿ ಯಾ ವಿಲ್ ರೈಟ್ ಇಯರ್ ಬೈ ಬ್ಯಾಂಕ್ ಆರ್ ಕ್ಯಾಶ್ ಹೌ ಮಚ್ ಇಸ್ ಕಲೆಕ್ಟೆಡ್ ಫ್ರಮ್ ಬ್ರಾಂಚ್ 1,60,000. 1,60,000 ಅಷ್ಟೇನಾ ಏನಾದ್ರು ಇದೆ. So actually 1 lakh and then next entry is 1 lakh. Sorry, 60 and then 1 lakh. Together 1,60,000 is collected. It is like realization from branch or received from branch. Asset is decreasing, so credit. Understood? Then credit sales. Do we write entry? No, we don't. Why? This is the transaction between the branch and customer. Head office will not write entry. But if they give closing stock, good. If they don't give closing stock, we should find the closing stock. So there we'll take, what and all do we take? We'll take the opening stock 30. We will add goods sent to branch. 1,60,000. This will deduct this 2,000. And then goods returned by debtors 960. Debtors have returned it back to, so we'll deduct this also. Sorry, we'll add back this also. Cash sales we will deduct. Why? Goods are going out, no? So we'll deduct this cash sale and credit sale. That is how we find the closing stock. If they give, very good. If they don't give, we will find it. If they give, very good. If they don't give, we'll find stock. Opening stock plus purchases plus sales, sorry, minus sales plus sales return. is equal to closing stock. If they give, good. If they don't give, we'll fight. Do we know right now that whether it is required or not? No. No. Chill, mad. Relax. Will we go ahead? Next, discount allowed to debtors. Do we write entry? No, we don't write entry. Ignore. Why? This is transaction between debtors and third, what to say, debtors and branch and third party. Understood? If in case they give closing debtors, good. If they don't give closing debtors, then we would need this. Why? Opening balance of debtors plus credit sales minus cash collected minus discount minus bad debts. You should do that to find the closing debtors. Do we know right now closing debtors is given or not? Now you don't do. Now relax. Ignore. Then expenses paid by head office. For this we write entry. What is entry for expenses paid by head office? It is like we paid money to branch. Branch account debit to how much? Rent to salary stationery. Again, Bekar Kudi. We'll write the entry as 1,800, 3,200 and 800. 4,000. 5,800. Branch account 2 cash. 5,800. Correct? Did you understand? After that, petty expenses paid by branch. Do we write entry for the 600? Don't write entry. If they give us the closing petty cash balance, good. If they don't give us the closing petty cash balance, then we should use this. By opening balance of petty cash plus further money given by way of petty cash less petty cash expense paid to find the closing balance. That will be working. Will be then depreciation to be provided. We don't consider. If they give closing balance of furniture, ignore, write closing. If they don't give closing, opening balance of furniture, minus this to find the closing balance. This will not come in our branch. Then stock at invoice place. Stock they've given. We don't have to count it. If they would have not given, we were supposed to. How much is stock? 28,000. 28,000. At invoice place. Shall I write here credit side? By balance carried down. How much is stock? 28. This is at invoice price. I should remove 28%, 28,000 into 20% on debit side. By what rating? To stock reserve. How much? 5,600. Just to 5,600. What do we have after that? Question. Check whether all the opening balances we have written closing balance or not. On after that you find profit. Debtors, cash, asset. Debtors, cash and assets. Have we written them? We have not written those values. We should find it. First we'll start with branch asset. Branch asset opening balance is how much? 3,000. Depreciation is 10%. 3,000 to 10%. 300 decrease depreciation of 10% will get 2,700 as closing. Understood? Okay. After that, next item is debtors. Debtors will find 18,000 is the opening balance. Take in your calculator 18,000. 18. Sale, credit sale. Add 60. Deduct discount 160. And cash collected is there. Deduct this 60,000. Cash received from debtors. And also deduct 960. Did not understand what not to deduct? Okay. ನಾನು ಇನ್ನೊಂದ್ಸತಿ ಹೇಳ್ತೀನಿ ಕೇಳಿ red. Okay na? So take sundry debtors 18,000. Branch debtors. ಇದರಲ್ಲಿ branch record ಮಾತ್ರ ಮಾಡ್ತಾ ಇದೆ. Head office entries ಮಾಡ್ತಾ ಇಲ್ಲ. We are not doing head office entry. Head office entries we will do in trading account of that. 18,000 is the debtors opening balance. To this, how much is the credit sales made? How much is discount given? 160. So 18,000 plus 60,000 minus 160 minus the goods that they gave back 960 minus the cash we have received 60,000. Ashte alla? How much do we get? 16,880 will be our branch debt. Similarly, here we have petty cash. How much is opening balance? We should find the closing balance. How do we find? Take this. Now I'll use different color. Which color? Brown. 800. Did you take 800? Then what is the cash sent to branch for petty cash? Petty cash expense paid by the branch. Deduct this 600. Is there any petty cash sent to branch anywhere? Not there. So from 800, 600 is paid. What is remaining? 200. Done. When you write all of this, you take the total on the credit side, total on the debit side, balance and figure is whatever we did now, no, it can be found as working note, load, invoice price. We can compute it. And next thing, that closing debtors, closing petty cash, cash remitted, all of this also we can do detailed working note. Sir, will we get marks for this working note? For these working notes, you don't get marks. But they are part of the answer. Only working note barre marks ಕೊಡೋದಿಲ್ಲ. Don't expect marks for writing only working note for these things. Are you getting it? So I'll share this sheet with you all where solution to all the chapters are there. Branch, incomplete record, department, insurance claim, all the questions. And for everything, every item, it's not just written. How did we get that amount is presented in Yapina closing stock Kotilva closing balance of data. They have not given. We found it, no? Stock Kotilandre. Stock Kotilandre we should find. But whatever stock that we find now might not or need not match with 28,000. Why? There might be normal or abnormal loss. What do? We take opening stock. We'll add goods into branch. We'll deduct sales. But everything should be done at invoice price. Opening stock at invoice price. Very good. Goods into branch at invoice price. Very good. Sales will be at selling price, what they've given here. That selling price should be brought down to invoice price and then we should deduct it. Such question is also there. That question is also there. I'll tell you which question mein stock has to be found. One of the questions. See, branch stock has to be found. Question number, next question. Question number 4. Question number 4. Opening stock, we know. Goods into branch, we know. Goods into branch returned, we know. Sales, we know at selling price. We'll write the sales at invoice price and then deduct it. See what is the stock, what is the sales that is given in question number 4. Next question. Okay, no. See the sales, sales 9,700 and 3,140. Am I right? Here I have not taken 9,700 and 3,000. Sales is made at invoice price only in this case. Sales is made at invoice price. If they told sales is made at 20% more than invoice price, from sales we'll eliminate that 20% and then find the sales at invoice price and then take it. You getting it? Such relationship will be given. Depends, sir. 8 marks, 10 marks. I'll tell you something. There is actually no standard blueprint. I can tell you certain same question when it is asked more than once in the examination. There are few questions which has been asked more than once in examination. Same marks Kotila. Certain times the same question which was asked for 12 marks. In another exam it's been asked for 10 marks. You're getting what I'm trying to do? They can play. There is a possibility to play with that. And that's how paper becomes difficult. Paper becomes difficult means they won't ask an out of the box question. 12 marks question 10 marks. So then you would have to actually write for 120 marks in an 100 marks paper. So then it will obviously become difficult. It will look difficult. That's how paper becomes difficult. And at CA final level, when they introduced the costing and case-based questions, the same questions what were there in costing were actually there in this SEMA exams and USCMA exams for 40 marks question. That 40 mark question, they would get 20 marks. That's how it used to be there. So at ICA, what happens is you will be asked to do more things for less marks in less time, because that is the requirement of the hour. These many returns to file by with this much time, because you want this much money. See, compare the population of US and compare the population of India. Which country has more population? India. US has more certified public accountants (CPS) than what India has. There are so many CPS. That is the largest accounting body. No, how does something become largest? Number of members are more. No, you're getting it. So with country with less population has more CPS. Country with more population has less chartered accountants. CPA in USA is nothing but CA in India. You're getting it. How do they survive? There, that's the reason. There, everything is expensive. People like the one who sweeps and then mops only will ask for your kidney and lungs. That's how expensive it is. So in our country, lot of things are cheap. But it's very, very affordable. So people who give accounting services, taxation services want to have a very posh life. They want to charge premium money. So this is still a premium service in the country. Getting? So to keep that as a premium service, you should charge high. Or when is it that you can't charge high? There are too many people giving services. Too many people should not give services. Too many people should not pass. If too many people should not pass, the course should become demanding. And because the course is demanding and there are not too many professionals, too much work to do from too many less people. That's the trick. So to be able to handle that pressure as a chartered accountant, you should be able to handle that pressure as a student. So CA examination is basically a stress test. Will you survive as a chartered accountant or will you break as a chartered accountant? So no chartered accountant will go, oh, I can't do this. You won't do that. Why? In exam, you can't do that. No. So you've gone through all those levels and you've been so polished and then crushed that you become a diamond at the end. The diamond will only shine after you become. Aku sir. Pradeep Ishwar ನೋಡ್ತೀವಿ. You next topic. ಆಯ್ತು. I will do the next one. Yeah. ಮೊಟ್ಟೆ ಅಂದ್ರೆ ನೆನಪಂತು. ಮೊಟ್ಟೆ ಹೊರಗಡೆಯಿಂದ ಹೊಡೆದ್ರೆ ಆಮ್ಲೆಟ್, ಒಳಗಡೆಯಿಂದ ಹೊಡೆದ್ರೆ ಮರಿ ಬರುತ್ತೆ. Shall we go to next topic? Next we'll do stock data system. Generation the biggest ರೋಗ ಏನು? ಕೋವಿಡ್, ಕ್ಯಾನ್ಸರ್, ಹಾರ್ಟ್ ಅಟ್ಯಾಕ್ ಅಂತ ಏನೂ ಅಲ್ಲ. ಅವ್ರು ಏನ್ ಅನ್ಕೊಳ್ತಾರೆ ಅನ್ನೋ ಭಯ. ಬ್ರದರ್ ಬಯಸ್ಕೊಳ್ಳಿ ಬ್ರದರ್. 10-15 ಹೇಳ್ತೀನಿ ಕೇಳಿ ಬ್ರದರ್. ಹೇಗೆ ದೊಡ್ಬೇಕು, ಓದ್ಬೇಕು, ಕಷ್ಟಪಡ್ಬೇಕು. ವಯಸ್ಸು ನಿಂಗೆ 7 ವರ್ಷ ಆಗಿತ್ತು ನನಗೆ ಕಳ್ಕೊಂಡಾಗ. I saw some reel someone had sent. Our king of inspiration, drone uncle is sitting and then listening. And then this guy is giving inspiration. He's telling how to motivate people. Pratap is like, inta space na next ಕೊಟ್ಟಿಲ್ಲ. Let's start with the second method, stock debtor system. Stock debtor system is actually debtor's approach. The debtor system we do know. Same thing. That one ledger has how many opening balances? 4-5 opening balances. 4-5 closing balances. For each opening balance, we'll open one separate ledger. Stock opening balance, goods sent to branch return, closing stock. We'll write it in one ledger, branch stock account. Opening balance of debtors, closing balance of debtor. Are you getting it? Credit sale we didn't write. Cash collected from debtors we didn't write. That we'll write now in one ledger. That's called as what? Discount bad debts. That will become our branch debtors. And opening balance of petty cash, closing balance of petty cash sent to branch. These three will pick. We'll write in one ledger. They will write branch cash spent also. That will become our branch cash. Are you getting it? Each of the ledgers in branch stock account, balancing figure, transfer to branch PL. Branch expense account, balancing figure, transfer to branch PL. Petty cash account, balancing figure, transfer to branch PL. Debtors account, bad debts, and then that discount allowed, all of this transfer to branch PL. And in the branch PL, after rate all of these items, what you'll get is the same profit. You'll get same profit. And then common items will get, if you eliminate and then write them one over the other, it will become branch debtor. Sorry, branch debtor system. Do you understand this? Now come on, read this. It is improvised version of debtor system. Under debtor system, though we ignore transactions between branch and customer, we still consider and in closing balances computation. Where is this? In debtor system. And here what do we do? There we do in one ledger, one working note, we do no plus minus. That working note will become ledger account here. What do we do? Like memorandum stock and memorandum debtors account, we prepare that small working note. Under which approach? Debtors approach. Under stock debtors approach, what do? We open one separate ledger. There we do kuti working note to find closing balance. All of that will become ledger. We prepare an account called branch stock account, branch debtors account, branch expense account, branch cash account, and all the balancing figures are transferred to branch P&L account. Branch stock. Why do we prepare branch stock? To determine gross profit. We don't call it gross profit. We call it surplus. If there is gross loss, we don't call it gross loss. We'll write deficit. And then branch debtors to determine the balances of debtor. And branch cash, branch expense, branch PL. Balancing figure in stock, debtor, cash, and expense is transferred to branch PL. And here we find the profit of the branch. And there we used to remove load within the branch account. We'll open one more ledger called branch adjustment. Branch in the branch stock, debit side, if opening balance is at invoice price. Branch adjustment, credit side we remove. Goods sent to branch in branch stock account debit side, removal of load, branch adjustment account credit side. Closing stock, branch stock account credit side, Removal of load, branch adjustment account debit side. And branch adjustment account, we get difference, no? That is also transferred to branch PL. Ultimately, you will get the same answer. You're getting it? I don't want to waste time discussing journal entries, but what I did is for each entry under debtor system, right next to the same transaction, I written the entry under stock debtor system so that you get different. For everything, we wrote branch account, branch account, branch account. For stocks and branch account. For debtors, branch account. For cash, branch account. For goods and branch account. Here we don't write them. Here we use branch debtors, branch stock, branch expense, branch cash, branch PL. We open separate ledgers. Here we branch stock. Here branch expense, branch account. Here branch expense. So we'll open separate ledgers. Branch debtors account, branch cash, branch expense. That. Are you getting it? Shall we solve a question? If in case available, same third question ಮಾಡಬಹುದಿತ್ತು. I didn't take up third question to discuss in the class because for third question I had not solved it under the other method. ಇರಿ ನೋಡೋಣ ಇದ್ರೆ third question ಮಾಡೋಣ. Let me just check. Give me one. Because you'll find it nice for the same question. Reprint. For the same question I have not solved. So 13th one ಏನೋ ಬರ್ಕೊಂಬಂದಿದ್ದಾರೆ ಯಾವ ಕ್ವಶನ್ ಮಾಡಿಸ್ಬೇಕು ಅಂತ. Okay, I have another question ready. I'll do what I've already kept it ready. Okay, now so that will save little time. I'll share the solution to everything, guys, later. I want to do question number 1 so that we can finish the concept. We'll go a little further ahead also. 10 o'clock. We need to do 4 more chapters. ಅಲ್ಲಪ್ಪ ಈಗ ಉಳಿದಿದ್ದೆಲ್ಲ ಮಾಡಬೇಕು ಅಂದ್ರೆ ಆಗೋದಿಲ್ಲ ಪುಟ್ಟ. We have so much more to do. ಅಲ್ಲ ಕಣ್ರಿ ಎಲ್ಲ ಮಾಡಕ್ ಆಗೋದಿಲ್ಲ. ಸಾಲ್ವ್ ಮಾಡಿರೋದಕ್ಕೆ ಹೊಸದಾಗಿ ಸಾಲ್ವ್ ಮಾಡಕ್ಕೆ if it is ready I will do. I don't mind solving it from the scratch, but we won't finish it within the time. ಟೈಮ್ ತಗೊಳುತ್ತೆ. ಲಾಸ್ಟ್ ಅಲ್ಲಿ ಈಗ ಟೈಮ್ ಇಲ್ಲ ಸರ್. ಸಾರಿ, ಡೋಂಟ್ ಫೀಲ್ ಬ್ಯಾಡ್. ಆಯ್ತು, ಅದ್ರ ಮೇಲೂ ಬೇಜಾರು ಮಾಡ್ಕೊಳ್ಳಿ, ನಾನೇನು ಮಾಡಕ್ಕಾಗಲ್ಲ. All I can tell you is this will ensure that we won't cross the time limit and we will be able to do everything. If I would have told your requirement in prior, I would have handled it. Let's do question number 1. Our method, I have solution to question number 13, but not in the approach that we want. Not under both the methods. Okay, let's quickly finish question number 1. Quickly see question number 1. Yeah. So first we'll do it under debtors approach. Then we'll do it under stock debtors approach. The same question. Have a look. Opening balance, impressed cash, sundry debtors. This both where do I write? In our branch account debit side. Opening balance. So branch account debit side. Impressed cash 2000. Branch debtors 25. Correct. What do we have after that? Stock transferred from head office, direct purchase. There are two varieties of stock. Some stock head office is sending to branch. Some stock branch itself is buying. So how much is it? 24,000 and 16,000. I will write branch stock 24 plus 16. Together it is done. What do we have after that? Cash sale, credit sale. We will not write entry for these. We will write the entry only when the branch sends the cash to head office, not when the branch sells the goods to customer. Done. Then direct purchases. So directly goods have been purchased by the branch. Branch would pay cash against it. We will not write the entry. We will adjust it to find our closing cash balance. Am I right? Who's paying cash for this? If head office pays cash for this, then I'll write. If the branch has paid the cash, then we won't write it. I think head office has paid up. A direct purchase are also made by the branch for which the payments are made at head office. Head office is paying the cash. So this is like branch expense paid by head office. What will be the entry? Branch account debit to how much? 45,000. Next, returns from customers. Customers have returned the goods to branch. We won't write entry. Goods sent to branch from head office 60,000. Branch account debit to goods sent to branch 60,000. It is not at invoice price. After that, Transfer from head office for petty expenses. Okay, head office has sent cash to branch. So this is branch account debit to petty cash. This entry will be written. Because so much money is recoverable from the branch. No, 4,000. I'll write here to bank or cash. Our cash balance is decreasing at the head office. Head office is writing this entry. Understood? Then what do you have? Cash expense. No entry. When we adjust it and then find the closing balance, it will be fine. Head office has paid this one. No, branch has paid if I'm not wrong. Head office paid. No, branch has paid. No, don't worry. For petty cash, it's only the same thing. Amount illa. Transfer from head office for petty cash expenses. Sorry. Bad debts. No. Discount to customers. No. Remittances to HO. How much? 1,65,000. The branch account is rate credit side by bank or cash. 1 lakh. Yeah. 1,65,000. 5,000 not received by head office. Sir, it is Sita. Sita is when it is sent by head office, not received by branch. It is not Sita when branch has sent and head office has not received. Logic artha aita? When is it Sita? Head office has sent it, branch has not received it. But when the branch has sent, head office in branch account will write, they have given us 1,70,000. In my cash account, I will not write. I'll write 1,65,000 and then 5,000 in my balance sheet, I'll write it as Sita. You getting it? Geeta also. I will not include in my closing stock. Just above my closing stock, I'll write Geeta. Getting it? Then after 1,70,000, branch expense directly paid by head office 30,000. Branch account debit to cash. Got it? Then closing balance. Stock they've given, debtors they've given. Oh, debtors and impressed cash we should find. Petty cash they've given. Right? 10, 15, and 4 will write. So 10, 15, and 4. 10 and 15, no branch stock. 10 and 15 together is if 5. And what do we know? 4 another petty. Oh, this is cash expenses. Petty cash expenses paid by the branch. Maybe for that we will not write entry. Paid by the branch will not write entry. That will be used to find the closing balance. So now we don't know two things. One is petty cash, other one is branch debtors. How do we find branch debtors? Opening debtors is the question. The question 25 no. That is the expense paid by the branch ಅಂತ ಅನ್ಸುತ್ತೆ. ಆ ಕ್ಲೋಸಿಂಗ್ ಬ್ಯಾಲೆನ್ಸಸ್ ಅಲ್ಲಿ ಕೊಡಬಾರ್ದಿತ್ತು, ಅದು ಸಪರೇಟ್ ಆಗಿ ಕೊಡಬೇಕಿತ್ತು. ಅಲೈನ್ಮೆಂಟ್ ಇಸ್ ಲಿಟಲ್ ಕಾನ್ಫರ್ಟ್. Okay, and that petty word is petty cash expense paid ಅಷ್ಟೇ. Petty cash expense paid. 25,000 is debtors. So 25,000 debtors. How much is credit sales made during the year? Credit sales, credit sales, credit sales. 1,30,000 credit. And there is bad debts 1,000. There is discount to customers 2,000. Is there any return of goods by customer? Returns from customers 3,000. So 25 plus 1,30,000 minus 3 minus 1,000 minus 2,000 plus 1,30,000 minus 3 minus 1 minus 2. And there is some money collected. How much is collection from debtors? Collection from debtors. Where is it? Discount to customers, remittances to HO. Ilva. Collection from cash sales is 45 and 1,65,000 is the amount remitted. So if you adjust it, you will get how much is the cash collection. How much is the money that you sent to head office? 165, no. In that, how much is cash sales? 45. Correct? 45, if you eliminate, what do we get? 170. 5,000 is in transit. 165 plus 5. 170 we have sent. Cash sales are less month. 45. Remaining money, how did we get? Did we print? No. Collection from debtors. Collection from debtors is 125. It is not a very simple question also. One beda, one beda, one beda. Yeah. Collection from debtors is 120. If you deduct that, you will find the closing debtors balance to be 24. And that 24 will write here. Branch debtors 24. Understood? What is after that? Now you should find impressed balance. Impressed opening balance 2. What is the further cash sent for petty cash expense? How much is the expense incurred? 2 plus 4 minus 4. Understood this? We can do working note if you want. 2 plus 4 minus 4. And once you're done with this, we have everything marked in our branch account. Take the total on the credit, 170 plus 2 plus 24 plus 25, we get 221. From 221, start deducting all of this. 2, 25, 40, 60, 45, 4 and 30, get profit of 50. This is under which approach? Debtors approach. Now let's do stock debtor system. Shall we do stock debtor system? Under stock debtor system for the same thing. Let us say we're starting with branch impressed cash. Branch impressed cash. So ಈ branch impressed working note ಮಾಡಿದೀವಿ ನೋಡಿದ್ರಾ? Opening 2, received 4, spent 4, closing balance 2. Correct? 2 ಹೋಯ್ತು, 4 we collected, 4 we spent, balance is 2. Observe the account here. Opening balance 2, cash received from head office 4, branch expense 4, and then closing balance. Understood? In impressed cash account, I have done by branch expense. Am I right? In branch expense account, ಮಾಡಿಲ್ವಾ? Straight away we posted to P&L. Expense is how much? 4. We can actually open one branch expense account if there are too many expenses. There on the debit side, I'll write by branch cash. On the credit side, I'll write 2 branch P. Now what I'll do, in impressed cash account, I've written by branch expense. We'll go to P&L. In P&L account, I've written by branch cash, by branch expense. How much is that? 4,000. Understood. Next, I'll open one more ledger called branch debtors. Here we did debtors working note. What all did we do? Opening 25. Correct? Move this. I'll do it again. How much is opening balance? 25. Am I right? That 25 I'll write here. Opening balance. What is the next item that we have written here? Credit sales of how much? 1 lakh 30. I will add 1 lakh 30. I'll write again in branch debtors, branch stock 1 lakh. Then what is there? Sales return, bad debts, discount, collection. 3, 1, 2 and 125. I'll write here. Sales return, bad debts, discount and collection. 3, 1, 2, 125. Are you getting it? Then we'll find the closing balance. This branch stock only 3000 barutte. What is this? Sales return. In branch debtors, if I write by branch stock, in branch stock I should write 2 branch debtors 3000. And this discount and bad debts 1 and 2 expense. In branch debtors I have written branch PL. In branch PL I'll write 2 branch debtors 1000 and 2000. Bad debts and discount. Got it? Anything else that's left here? In branch debtors I have written branch cash 125. In branch cash I'll write 2 branch debtors. How much? 2 branch debtors, no? 125. Understood? Very good. So branch stock, branch impressed account you understood? Branch debtors you understood? Now we'll do branch stock. How much is the opening balance of stock? We have it in the question, I think. We have not done working note for it. I think entire data was given to us in the question. Opening balance is how much? 24 plus 16. 40 in our branch stock account. 24 plus 16. How much is purchases made? There is some one entry called purchase made, no? So this is over. 24 over. How much is direct purchases made? 45. Again, this cell right. Branch account debit to cash. Then credit sale, cash sale together. 45 and 1 lakh 30. This is decrease in stock, no? In my branch stock, I'll write credit sale. Cash sale 45, credit sale 1 lakh. Sir, this sales will be at selling price. I know. That's the reason we find balance figure in branch stock account. Branch stock account. That will be our GP. Sir, what if this branch stock is at invoice price? Then this is invoice price. This is selling price. Difference between selling price and invoice price you will get here. And on this invoice price load, you will remove in branch adjustment account on opposite sides. There, whatever balance and figure you find, also you will write it to branch P. So ultimately, in branch P, you will get difference between cost and selling price. Understood? Branch adjustment will have opening stock ಮೇಲೆ load, closing stock ಮೇಲೆ load, branch purchase ಮೇಲೆ load, branch stock transferred, reversed, on that everything load. Their balance and figure will again transfer to branch P. Nice. So this is over. Then goods sent to branch is also given in the question. How much is that? 60,000. Correct? Put it there. Seeing it from the question, no? How much is stock sent to branch? Goods sent to branch. Okay. And then return from customers. Customers has returned. That is also again received. Here I have written 3,000 to branch debtors. In branch debtors account I have written on the credit side. Already written this item. We wrote it from there. So then what else is there? We have closing balance. How much closing balance? 10 plus 15, 25. ಕೊಟ್ಟಿದ್ದಾರೆ ಅವರೇ. So I'll write branch stock 10 plus 15 closing balance. So this is the balance sheet. This is like gross profit. Like you're getting it? Difference is 52. So in branch stock I've written branch PL. In branch PL I'll write by branch stock. So by this I'm done with petty cash account, debtors account, stock account. Now cash account. They've given opening closing balances. Just write whatever is given. So branch has sold goods. Branch has sold goods. It has received cash sales money. How much? 45,000. You'll write 45,000 there. And then the cash that is received is 165 and 5,000 is not received by head office. This is the money sent by the branch to head office. So that much money will go. This is matched. This is not affecting our P&L anyway. In the P&L, only thing is that branch expense paid 30,000. If we write, we get profit same 15,000. I marked it. If you people think in the order, keep your branch stock, branch debtors, branch expense, branch cash, branch bill, all the ledgers you keep open. Start the question from the beginning. Each item you go on ticking and wherever it belongs, go on posting. You'll get the answer more smoothly. For everything, you think of the journal entry. Expense paid, what is the entry? Cash received, what is the entry? Think of the entry, post it to respective ledger. You will get it. Not difficult. Actually, not difficult. And same thing, whatever we have now, this branch stock is there, no? I will call it trading account. I will not write balance brought up. I'll write opening stock. I'll not write two cash. I'll write two purchases. I'll not write two debtors. This is sales return. I'll deduct it from sales here. And then I'll not call it branch cash, branch debtors. I'll call it by sales account. Cash sales, credit sales, less sales. I'll not call this balance carried out. I'll call it closing stock. Understood? And I'll not call it goods. Goods into branch, I'll write like that. This I'll not call it branch PL. I'll call it by gross profit. And below this, I'll write P&L account. I'll not call it branch PL. This is by gross profit brought. And all of this, I won't write branch debtors. I'll write two bad debts, two discount, two branch expense, and call this net profit. And these ledgers, I won't call them branch cash, branch stock, branch debtors. I'll call it debtors account, cash account, expense account. And then prepare. It will look somewhat like this. Final accounts approach for the same question. Read which one? Which one now? It's a different one, but see, this is how it looks. So these are the ledgers under the normal one. Under final accounts approach, we start rating it as opening stock, purchase, sales, closing stock, gross profit, bring gross profit down, write expenses, find net profit. So this trading account is branch stock account. This P&L account is branch P&L. If it is at invoice price, in branch stock, everything will be at 24 and here it will be at 4,54,000, no problem. This will be at 4,80,000. So this minus 6, minus 120 and minus 12 will be there in branch adjustment. From there, we'll write it to P&L account, trading account. That will look like final account. You're getting it? The regular class, we do it for a very long time. So people understand it much better. Here also, we have not spent anything less. We spent 1.5 hours to understand all the three methods. I hope this made little sense to you. Yes. Majority of the times, the question in the examination will be usually on debtors approach. First approach, usually. But there are instances where they've asked you stock debtor system or final. They'll not ask more than one method. They'll ask only one method. Ask only, you understand this? So this is how we do under all the three approaches. And then we have the next one called as wholesale price. See, I told you, know, whenever the stock is sent at cost price or invoice price, three methods. Debtor, stock debtor, and final accounts. Then the next one, when the head office treats the branch as a retailer, then we prepare wholesale price. Shall we see wholesale price method? Very good. This is something similar to our invoice price. Okay. Now, head office cost of goods is 100. Head office sends the goods to branch at 130 rupees invoice price. Branch sells it at 150. So the disclosed profit margin is 20. Undisclosed profit margin is 30. We call that 30 rupees as load, 20 rupees as profit at the branch. What branch? Am I right? We'll change the name. 100 rupees cost, 30 rupees whatever is their inflated price. We call that 30 rupees wholesale margin. And then invoice price 130 is there. We'll not call it invoice price, we'll call it wholesale price. 20 rupees disclosed profit is there. We'll call it retail margin. And 150 rupees selling price there. We'll call it retail price. You understand? Invoice price will become wholesale price. Load will become wholesale margin. Profit disclosed will become retail margin. Selling price will become retail price. Because head office sends the goods to branch at wholesale price. That is nothing but invoice price. Branch sells the goods at retail price. That is nothing but selling price. Cost plus load wholesale price. Add retail margin. And this load is nothing but wholesale margin. Understood? Read this. Stock entries in the branch will be booked at wholesale price only. That is nothing but invoice price, except for the sales at the branch, which will be recorded at sale price. Obviously, in the branch stock also we wrote the sales at selling price. Difference became our GP. And load difference has to be removed. Load we remove by opening branch adjustment. Same thing we do here also. They do it by stock reserve. Stock reserve. This is how the ledger will look. Opening stock at wholesale price, nothing but invoice price. On this, the load has to be removed. We'll remove it. And then goods are sent to branch. These are wholesale price. These are like invoice price. Again, load has to be removed. We'll remove it. And then closing stock is at wholesale price. On this also, we should remove it. We'll remove it. Abnormal loss. And then we'll write sales. Sales is at selling price. Goods sent to branch returned is at wholesale. By doing this, we get gross profit. No. This is not the difference between cost price and selling price. This is difference between wholesale price and selling price. 130 and 150 difference is. And 130 and 100 difference 30 we should write. No. Cost 100. Wholesale price 130. Retail price 150. Here we are writing the cost as 130. Selling price as 150. So how much is the profit booked? 20. But original cost is 100. Selling price is 150. How much is profit? 50. In the 50, 20 rupees is booked is GP. That is difference between wholesale price and retail price. Difference between cost and wholesale price 30 should be booked. No. Where do we write it? Next, GP ತಗೊಂಬಂದ್ಬಿಟ್ಟು here we'll write that profit. Sorry, we'll open stock reserve. There we remove that. We open stock reserve account. There, here this is wholesale price. No, this wholesale price, this wholesale price, this wholesale price. On that we write opposite side. Opening stock and goods into branch credit side. On the closing stock debit side. We write it like this. See, opening stock and goods into branch pay. Sorry, opening stock pay credit side, and on the closing stock and on the opposite side, we remove load. Whatever balance we get in the stock reserve account will be transferred to branch PL account. And then that branch PL balance will get the correct answer. And but this is done at the head office. There what we do, under invoice price method, we do it in the same ledger. Right below that we open one branch adjustment. There only we remove load. Transfer it to branch PL only. Are you getting it? What we do now is we are trying to identify the profit at the branch. That is retail profit. That retail profit will transfer to head office PL. So head office PL may from the branch we book profit of only 20. 30 rupees profit is there, no? That will write only in head office profit and loss account straight. That 30 rupees we straight away write as profit in the head office PL only. Previously what we used to do, 100 rupees worth of goods sold by the branch at 150. We should record 50 rupees profit in the branch name. We were not recording 50 rupees branch profit. We used to record 30 from gross profit. We used to add, 20 rupees we used to book as GP. 30 rupees we used to add to branch PL. So branch profit is to become 50. Now what do we do? We'll treat branch as a retailer. So retailer made profit on only retail margin. Retail profit is only 20. So branch in the profit will become 20. My wholesale margin I will write as if I sold to branch and I made profit of 30 here. Ultimately 50 rupees profit. Ultimately 50 rupees. But did you understand this? That's the only difference here. Rest everything is same. There we prepare branch adjustment in branch books and transfer to branch PL. Here that branch adjustment is done in head office books and then transferred to head office PL. Head office records ali ಮಾಡ್ತೀವಿ stock reserve. We do stock reserve where? Head office record, not in branch record. On this there is one question or maybe two questions. I think there is only one question. If you do this, you would understand. It wouldn't be difficult. You want me to discuss this question in detail? We'll handle it. So by this we're done with dependent branch. I told you no, dependent branch. Dependent branch में we need to do debtors, stock debtors, final accounts and wholesale price. ಇಷ್ಟು ಆದ್ರೆ dependent branch. Now independent branch. Independent branch means what? Branch is maintaining its own records. Branch is maintaining its own records. When branch is maintaining its own records, there are two ways. One, branch keeps records of everything. Branch keeps records of everything. And then at the end, they'll send one report to head office. And head office will include that, consolidated. Next one is called abridged. Abridged means what? Branch will record, not everything. Branch will say, I will maintain sales, purchase, expense, cash, I'll record. Assets record, I won't. Assets record, you maintain. Getting it? Expense, I'll maintain. Cash, you pay. So that is abridged. Half I'll do, half you. Or if I'll do everything and I'll give you proper trading P&L balance sheet, I'll give. You just to consolidate this into your head office records. That is what to say, consolidation of records. You maintain full records. If they do half, I do half, it's called abridged. I'll do half. They would have had the half. We should adjust that and then include it there. Getting it? That is the entries that you have next. Shall we discuss that independent branch? Might sound very difficult, independent branch. I don't know why people also hate independent. Do people hate independent branch? We hate branch only, sir. But it's logical. Tumba logical. ಓದೋ ಅವಶ್ಯಕತೆ ಇಲ್ಲ ಸರ್. ಕರೆಕ್ಟಾಗಿ ಅರ್ಥ ಮಾಡ್ಕೊಂಡ್ರೆ you don't have to revise it, mug it up the day before exam. You'll be able to handle it. Record all the transactions at the in the perspective of the branch. Branch only maintains the records. After branch maintains all the records, no, branch will tell how much is the balance of head office account in branch records. And head office will tell how much is the balance from branch in the head office records. Both should match. Branch doesn't have capital. Branch gets capital from where? Head office, no. So when the branch prepares balance sheet, capital ಜಾಗದಲ್ಲಿ head office ಅಂತ ಬರುತ್ತೆ. Capital ಜಾಗದಲ್ಲಿ head office ಅಂತ ಬರುತ್ತೆ. Correct or not? And in the head office books, we won't write individual asset of branch separately. On the asset side, we'll write one thing: Bangalore branch, Chennai branch. In that, if you click every asset, liability, trading account, P&L account, everything will come in detail. So on the asset side of head office books, there is branch. On the liability side of branch books, there is head office. Balances should match. Same amount should be there. If it is not the same amount, why is there a difference? You should do reconciliation. You should do reconciliation. For that reason, we maintain this much records. Got it? Okay. So branch prepares a trading P&L and balance sheet. So these are the entries. The goods are sent to branch. Head office will write branch to goods sent to branch. Branch will write goods received from head office to head office. So for everything, there will be ulta entry. Ali cash credit, ali cash debit. So that way, the set of entries has to be recorded. So when the branch paid, purchase of goods and the money is paid by, what to say, branch is paying it. Head office will not write entry. Branch will write purchase account debit to cash. Branch stock will increase, branch cash will decrease. If it is paid by head office, purchases is made by branch. Payment is made by head office. It is like you go somewhere, you buy something. You'll call your dad and say, I like this, I'm buying. ಇದು ಫೋಟೋ ಕಳಿಸ್ತೀನಿ ಸ್ಕ್ಯಾನರ್ ಪೇಮೆಂಟ್ ಮಾಡಿ. So you purchase, payment made by dad. You will write purchase account debit, dad will write cash account credit. Correct or not? You wrote purchase account debit. Credit, you give credit to dad. Correct or not? Papa's gift. Dad will debit your name. You are asset in Papa's balance. Correct, correct. Expense, expense not written off. Don't know how to write off. So still kept in the balance sheet asset side. Okay. That similarly branch expense. Expense is paid by branch, expense to cash. Incurred by branch, expense debit in branch, paid by head office. Head office selling. Head office will write branch debit, branch will write head office. Same thing. Goods sold by branch. If cash is received by branch only, branch will write cash to sales. Sometimes it will happen, goods are sold by branch, cash is received by head office. You work hard. You want to get money. So whom to pay money, you give Papa's money. Money will be received by Papa. You will write sales account credit and head office will write cash account. Head office will write branch account credit, branch will write head office debit. So one day that will also come where they'll receive money on your behalf and they'll give credit to you. Somewhere they go and they're like, okay, you are his father, no? They're like, oh, they'll feel good. They'll go in. Not too far. Yeah, the day will come. Then the cash is collected, cash to debtors. The cash is collected by head office, cash account debit in head office books. Debtors account credit in branch. Branch will write head office debit, head office will write branch credit. You're getting it? It is the same boring entries, guys. Asset is purchased. This depends who's maintaining the asset. If the asset is maintained in the name of head office, ledger is maintained by head office, records are maintained by head office, used by us. We are using the asset. Vehicle is bought, registered in dad's name. Documents are with dad. Only key is with us. Are you getting it? Or no? Head office only buys the asset. So head office will write asset account debit to cash. We will only use it. Sometimes it might so happen you bought the asset, but in dad's name. So head office will write asset account debit. We will write cash account credit. You're getting it? Head office will write branch credit. Branch will write head office. Getting it? So head office has maintained books, but you are using the bike. You should charge depreciation. What do? You will write depreciation account credit debit. Branch head office will write asset account credit. Maintenance of the asset account is made by whom? Head office. Usage is done by whom? Branch. So expense should be booked by whom? Branch. So branch will write depreciation account debit. Asset account credit will be made by head office. Sir, why that way? If you don't book expense in your branch books, your profit will be overstated. Profit will be, are you getting it? If you are maintaining the branch records, asset records, then you will write depreciation account debit. You will write asset. Are you getting it? Observe this. Asset purchased, paid by branch, head office no. Assets are maintained by whom? Branch only. So if it is maintained by branch, branch pays asset to cash. If it is paid by head office, cash account credit by head office, asset account debit by branch. Got it? Depreciation, depreciation account debit to assets by branch. By maintenance of records is with branch. However, if the records are maintained by head office and the asset is purchased and paid by branch, branch will write to cash, asset will be debited by head office. If it is paid by head office will write asset to cash, branch will write to it. Records are maintained by head office, depreciation expense has to be recorded. Depreciation will be debited by branch, asset will be created by head office. Branch will write head office credit, head office will write branch debit. Understood that? Ultimately, remittance of fund. One person is sending, the other person is receiving. These entries have to be written. They'll ask you these base journal entries. This is difficult. Initially, you had seen this, you had found it difficult. Asset maintained by branch, asset maintained by head office. Oh my god, complicated. This is very easy. Usually, you won't get question. If you get questions, they'll give 4 entries, 5 journal entries. Transactions will be given, you would have to write entries. If they give 4 entries, minimum 6 marks. If they give 6 entries, minimum 8 marks. Very less probability in exam, but it has come. This independent branch entries. And sometimes they'll ask this entries based on this abridged and consolidation also. Incorporation of assets into head office books. Yeah, little boring, but easy. In head office books, branch will be there as an asset. Branch account 1 lakh. That branch account, if you open 1 lakh, why is it 1 lakh? There is assets worth 1 lakh 20, there is liabilities worth 20. So instead of writing branch account 1 lakh, you will write asset A account debit, asset B account debit, asset C account debit, asset D account debit, to liability A account, to liability B account, to liability C account, to branch account. Instead of writing branch 1 lakh, you will write 4 assets, 3 liabilities. Assets minus liabilities will be 1 lakh only. That is nothing but entries of detailed consolidation. Head office account debit all the to credit all the assets. Here debit all the assets and then credit branch. Same thing like how we do in amalgamation, transfer of assets. No, only group 1. You understood this? This is easy. You just have to see it once and you will love these entries. And ultimately, lastly, we have one thing in this chapter called as foreign branch. What is it called? Foreign branch. Foreign branch will be classified into 2 categories. Integral operation, non-integral operation. Integral operation means that branch is there, no? That is my extended operations. Non-integral means that's not my extended operation. But however, for the purpose of understanding, there are 3 words given. Management decision, no? Course of finance, so quantum of transaction. If it is dependent on head office, if not integral. Meaning, head office will take decisions for branch. Head office will make financing for branch. Head office will send the goods to branch. Majorly, it is dependent upon head office for decision making. That is integral branch. Not, it can buy the goods on its own, it can sell the goods on its own, it can raise the funds on its own, it can borrow loan from anyone on its own, it can decide the selling price on its own. Domestically dependent, independent, and independent. Foreignly, ಅದೇ ತರ integral, non-integral. But the difference why I didn't tell dependent independent is in India when we say inland branch, dependent independent andre records maintained, records not maintained. Practical case mein dependent means dependent upon head office for decision making. Independent means not dependent on head office for decision making. But in accounting, when we say dependent, records maintained, records not maintained. Records maintained by branch, records maintained by head office. Alva. When it is a foreign branch, records has to be maintained in the foreign country, in the foreign currency by the branch, whether dependent or not dependent. They have to maintain records. They cannot say, no, every sale bill, I'll send you the invoice, you write that. No, you have to maintain accounting. Why? That country also will have some rules. You're getting it? Unless you have created in some holiday country, Maldives, so Mauritius, so Cayman Islands, so where there is no one. Ella like 10,000 people, 20,000 people will be there. There are 1 lakh companies incorporated. Cayman Islands and all population is less than lakh, but number of companies incorporated is so many. Cayman Islands and all Vodafone case, all this, they're all tax holiday countries. So what they do is they incorporate company there, and that will become the holding company of several small subsidiary companies. And whenever they want to sell a company, now assume that I have a land in Bangalore. I want to sell that land in Bangalore to Sriniti, Sri, Sri, Sirish. I want to sell one land to Sirish. If I sell one land to Sirish, then you will say cost of acquisition, indexation, ella seri, LTC, yaake, rupee, income tax. So what do? I'll buy a land in India, not in my name. I'll create a company in Cayman Islands. That company will buy land in India. If I want to sell land to him, I will not sell Indian. That Cayman Islands may have shares, no? I will sell that shares to him. I was the owner of that company. I was the 100% shareholder of that company. Now he becomes 100% shareholder of the company. You getting it? If income tax department, sir, I say I don't have any RN may I have shares. That shares is 10 rupees. I sold it for 10 rupees. Taxation also you do. It will happen there. See, this is how all this Vodafone case happened. You read this Vodafone case, what happened? Vodafone case, what happened is that India mein Hutchinson SR was there, no? That dog, pug used to walk. That was selling their business. So when they're selling their business, Hutchinson SR, there was a UK-based company, Hutch, that had Indian operations called Hutchinson SR. Hutch was selling its business. Vodafone was interested in buying the business. They didn't do anything in India. That Hutchinson SR was there, no? It was controlled by a company which was there in Cayman Islands. That Cayman Islands company shares were transferred from Hutch to Vodafone. Income tax department told there is sale. Give me tax. They told Vodafone that India mein Hutch was there. That told boss, I don't know. I am doing my business. How, there is no sale happening here. Are you getting it? Then they asked Vodafone. Vodafone told, I didn't even keep my feet into India. Sorry, boss. How do I do it? I don't do anything. Why? I didn't even come to India. Why should I pay? Then that Vodafone Hutch's parent company is there. They told, boss, did I even sell one share of Indian company? Oh, then why are you asking? So then income tax department was strict here. They're like, man, what did amount of money involved in that was very huge. So they wanted to somehow prove it. Then you know what happened? India's Hutch company changed their name to Vodafone. Then they're like, you are an agent of a foreign company in India. You have the responsibility to do TDS. Why did you change the name from Hutch to Vodafone? Because they told, who's he? Your boss. You are an agent of a foreign company in India. Your ownership is getting changed. You should do TDS. He's like, hey, boss, the one who's paying consideration will do TDS. I am the one who's being sold. Why should I do TDS? The question was told. Then they made some retrospective amendments in the tax laws to bring that under the tax bracket. This is, and then the international, what to say, no, fight, disruption, international dispute, or there is this better word. So what they told is that if government has a right to change the law retrospectively to bring an contract under the taxation agreement. See, they read the taxation agreement. To counterfeit the taxation agreement and to go beyond and taxation doesn't come, they plan their contract. After they plan their contract, if you're changing the taxation laws to include that into the thing, then you should also let us to cancel that contract and then redo the contract in such a way that it doesn't attract tax again. So that's where the entire faith in the Indian economy was questioned, and people told we will not be willing to do business with India. They're going to change their tax laws prospectively. So that is the thing. Read sometime when you have free. Okay. Not now before exam, but later. It's a very interesting case even to today's date. Integral and non-integral. Classification as integral, non-integral is based on these things. Now, why do we segregate it into integral and non-integral? Because the rates applicable are different. If it is integral operations, then what do we do? Opening stock, we'll try to apply actual rate. Opening stock will not be on a specific rate, no. Opening stock, what is there in the foreign branch, when it should be converted to domestic branch, we'll apply the actual rate. If the opening stock includes stock which has come from 3 different dates, the 3 different units which were there, which were sent on 3 different dates, what was the rate? That rate we should apply. If that is not available, then we'll apply the opening date. If it is non-integral, then what? They are doing it as an individual operation. No, we will not have so much data. Opening date may whatever rate is there, on that date we'll apply that rate. Are you getting it? For the goods which is sent, we'll not apply any rate. Why? Head office is only sending goods to branch. No, we know the actual value of currency, such goods in Indian currency. We'll rate that Indian currency. Remember, it is not conversion of foreign currency to Indian currency. It is conversion of foreign currency to reporting currency. That's where AS11 is applicable. If the branch is there in India, head office is there in US, then AS11 will be applied to convert the branch records which is there in rupees to dollars. AS11 is applicable for conversion of branch records to reporting currency. It is applied for converting branch rate to head office rate, not head office rate to branch rate. That's one thing that you should remember. Then closing stock, again same thing. If actual rate is available, actual in integral. If actual rate is not available, closing rate. Non-integral, it's like separate entity. We'll apply closing rate only. Done. Then for revenue items, average rate. Purchase, sale and everything. Each purchase, each sale, we can't go on doing the rates. We'll write average rate. And for monetary items, items which can be quickly converted into cash, current assets, current liabilities, we'll apply closing rate. For non-monetary items, we'll apply original rate. We'll apply original rate in the case of integral. Non-integral, closing rate. Sir, then depreciation, what rate do we apply? Depreciation, what rate do we apply? Now there is an Indian company which has a branch in the foreign country. It has assets in the foreign currency. It is depreciated. Depreciation closing rate. Some people say closing rate. Why, sir? Depreciation is computed on the entire. But depreciation is for the entire year, no? Average. You know what you do? Foreign currency asset is there, no? Depreciated. After depreciating value, you will get no asset. That you convert to domestic. Get the logic? Don't apply any rate on depreciation. First full depreciation you do. Full depreciation. After depreciation, you get the value of asset. No? That asset you convert to domestic. Same with regard to provision for doubtful debts and a lot of other things. Wherever it has to be adjusted. Okay. Then head office balance. Head office books may branch balance will be there in domestic currency. In branch books, whatever is there, that should match. We'll adjust it. Any difference that's arising, in the case of integral, it will transfer to P&L. Why? Namde. My own extended arm, no, will transfer to P&L. If it is non-integral, we'll write it to foreign currency translation reserve account. Why? This time there is positive difference. Next period it will become negative difference. So don't book it as profit. It will get reversed. It will get reversed. Keep it there only. Go on changing till the time branch is closed or head office is open. That day we'll book it as profit. Till then, we'll keep it like that too. FCTR, foreign currency translation. So whenever the question is given, try and identify whether it is integral or non-integral. So how do we get a question? Given the question. If they give integral, then remember, try and apply actual rate on opening and closing stock. If not available, opening stock, opening rate, closing stock, closing rate. Revenue items, average rate. Monetary items, closing rate. Non-monetary items, opening rate. Non-monetary items, transaction date rate, actual rate. And when it comes to non-integral options, what do we do? Opening stock, opening rate, closing stock, closing rate. Revenue items, average rate. And then monetary items, closing rate. Other items will apply non-monetary items also closing rate. Not original. Non-monetary items also closing. If it is integral operations, difference that is arising between the balance, head office books, branch balance will be there in domestic currency. When you change all of these numbers in the branch records, in trial balance you will change or not in balance sheet? Where do you change? In the trial balance, when you change that balance in the branch books, head office balance will change. That difference what is there will be transferred to P&L. Where? Integral operation. Non-integer operations, transfer it to foreign currency translation reserve account. Whatever is that one question that I want you to try on this, I've put it here. Here only. Answer is there. I put question number also with explanation. I would want you to try this, and I hope you will understand when you do. Got it? I don't mind doing a question on this, but we've already spent 2 hours on branch. Got branch? Okay. Branch ಆಯ್ತು ಅಂತ ಅನ್ಕೊಂಬೋದಾ? Branch done. 10 AM ಅಂದ್ಕೊಂಡ್ವಿ 11. I think this is the chapter which you spend the maximum time. Done. ಈಗ ನೆಕ್ಸ್ಟ್ ಡಿಪಾರ್ಟ್ಮೆಂಟಾ? ಇಲ್ಲಿವರೆಗೂ ಬರಬೇಕು. ಬ್ರೇಕಾ? ಶಾರ್ಟ್ ಬ್ರೇಕ್. ಡಿಪಾರ್ಟ್ಮೆಂಟ್ ಮಾಡ್ಬಿಟ್ಟು ಬ್ರೇಕ್. 10 minutes break. We'll take a short break. 10 minutes break. Take a break for 10 minutes. Start department up. Come on, let's get back. We will now do departmental accounting. Tell me, departmental accounting looks very similar to the chapter of branch accounting, is what few people say. Few say, no sir, actually department accounting, no sir, looks very similar to profit pre and post incorporation. Which one do you think it is more similar to? Operation wise it is similar to branch, but preparation of problems wise it will look similar to profit pre and post. If you are ready to go outside the subject to compare this to another chapter, this will look like, sir, this is costing, this is not accounts only. Yeah. So first we, in order to make the chapter simpler, we will understand why do we do departmental accounting. It is very easy to identify the profitability of the entire organization. That we learnt it not in inter but in foundation only. But we need to identify the profitability of the each department so that we can give enough recognition to each departmental manager. It can always become like one departmental manager is doing out of the box amazingly well, and is making that organization's efficiency will go to higher level, bringing the variances very low, and then using the maximum absorption of the overheads, and then is generating full profits. One more departmental manager is creating full losses, because of which overall profitability of the organization will be very minimal. Now, at the end of the year, if both the departmental managers go for increment to the management should give increment to whom? Management should not give increment to whom? Management should give proper feedback to correct steps where? Where should the efforts of the management go? We need to identify. For this, you do standard costing, no? Set the standard, compare it with the actual, identify variance. So, to do that, actual has to be computed, no? That actually is computed here. We're trying to identify the profitability of each management, each department, and is judged by the management. That's what we're trying to do here, so that we can evaluate the performance of each management. You do a lot of decision making, no, in marginal costing, whether to buy or make, whether to repair or replace. Marginal costing. Are you studying at least one group? In that also studying 2 papers or 3 papers plan? You know, right? So similarly, now let's say we have 3 departments. One department's output will go to second department as input. Second department's output will go to third department as input. Third department will manufacture and then sell. Now, if in case, let's assume ours is a garment industry, we buy raw cotton, then first department will make thread, second department will make cloth, third department will stitch shirt and then sell. What if our conversion of cotton to thread is so high that market price is cheaper? Then we should close up that department A, no? Got it? If in case we work as one entity, we will not be able to figure this out. If we divide it into departments, then department manager will tell, I'll give you 10% of the profit as your commission. Then department B manager, no, we will say, why should I buy from department A at this much cost? He is sending me one bundle at 500 rupees. I can buy the same bundle outside for 400. So department A should be able to sell it at 400 and also make profit. It cannot happen like department A will manufacture at 500 rupees, transfer to department B at 400 rupees. They'll manufacture at 500, transfer at 400. Then department A will go on showing 100 loss. Then at the end, management decision when it takes, department A will be closed. Scrap. We will buy not cotton, we'll buy thread and then manufacture. Or it might so happen that department A is manufacturing one bundle at 100 rupees. Outside market price is 500. It transfers at 100. Let's say transfers at 100 cost. And entire profit is booked in department C. So department C will say, see, because of me profit, give me profit. But actually efforts is there. Department C, whatever is doing is not very efficient. Highly efficient cost saving is actually done by department A. So you should give credit to department A. No? If you don't give credit, very soon that guy will quit. Very soon you might have to buy the thread from outside. Then you will not make so much profit. So within the organization, transfers what should be made will not be made at cost. You will ask the departments to transfer the products at selling price. So that departments will book profit. So that we can identify each department performance, each departmental manager's performance for better decision making. However, after this, when we prepare one consolidated P&L, we should eliminate that inter-department profits. It cannot happen like I am department A or department B. I will say 100 rupees cost of goods. I will transfer it to you at 150. You accept. I will book 50 rupees profit. I will take commission. Next, at 150 rupees goods, you send it back to me at 175. You book 25 rupees profit. You take commission. Then again that 175 will send it to you at 225. So what are they doing? Transferring goods inter-department and then booking profit and then taking commission where entity is not going anywhere. 100 rupees goods is there at 1000 rupees in balance sheet. And on that 900 rupees profit is been booked which is not earned. Both the departments have taken commission also on that. You getting it? That shouldn't happen. So that's what we're trying to learn in this chapter. And how do we segregate that expense what is incurred in department? It's not like each department is remotely there. Each department has separate bank account. Each department has separate agreement, separate electricity connection, separate rental agreement. No, they might be all working under the same premises. Expenses might be discharged by the entity in total. There might be employees working in more than one department. There is one manager who's taking care of two departments. Now the salary given to that manager has to be split between both departments. There is one building where both the departments are there. The rental expense has to be shared between both the departments. Electricity expense, water expense, lighting expense, machinery is shared, depreciation has to be shared. So multiple cases are there. So how do we split those expenses? That's what we're trying to learn here. Got it? So the apportionment is usually based on category basis. So like you do in your activity based costing. This is not your absorption costing. No absorption costing. Absorption costing is traditional, where everything is segregated based on machinas. Whereas activity based costing is modern. What do? We identify cost driver. We identify cost driver for each thing, correct or not. And based on that cost drivers, we split that. That's what we're trying to do here. This is like activity based costing, not like absorption costing. However, when we don't have sufficient data, we will also go back to machinery rate. No? That's where we do here. So carriage inward and discount received. Carriage inwards is the expense incurred to bring the goods into the organization. We'll split it based on purchase price. High purchases, high carriage inwards. Less purchases, less carriage inwards. You purchase high goods, you will get more discount. You will purchase less, you will get less discount. So it will be based on purchases. Then if you talk about lighting, heating and electricity expenses, you can take number of units consumed. You don't have number of units consumed. In the question they give number of plug points, take number of plug points. If that is also not there, they tell number of machines, take number of machines. Or if that is also not available, maybe on the basis of square feet also. More square feet, more area, more lighting. But need not be. There can be huge area with only one light, small area with one big light. Depends. But based on the available information, we'll take the decision. Then wages and salary, based on number of employees, number of workers, or if they give some specific data, we'll take that specific data. PSI and PF contributions also same thing, based on the wages or salaries of the employees. Rent rates and taxes, based on floor space. Building maintenance, sweeping, mopping, renovating, all of this, based on square feet, based on the floor area. Depreciation and asset insurance, based on the value of the asset. Higher is the value of the asset, higher depreciation. Lower is the value of the asset, and maintenance costs also. Higher the value of the asset, higher maintenance. Lower the value, lower maintenance. Administrative expenses and other expenses. If there is a reasonable basis based on which we can segregate, then we'll segregate. There is director's fees. We can't split it between department. Directors in 3 hours of board meeting, they discussed 1 hour for department A, will split. So what do? Such expenses which can be directly allocated, we'll do like this. If there are any administrative expenses which cannot be directly allocated, we will not write it in departmental trading or PL. We'll identify department-wise profits, write them all together in the general P&L account of the organization. In the general P&L, we'll write non-allocable expense and non-allocable income. There might be some savings bank interest received. Which department will you give? You can't. What do? You write in general PL. So to the extent you can allocate the expense to each department, you will. But there is no cutthroat condition that you have to segregate to one of the department. You can't go. No, we can't write it to any department. We'll write it in general PL. Did you get that? And discount allowed, bad debts, so selling commission or carriage inward, sales manager salary, all dependent upon sales. Sometimes bad debts we can do it on debtors if the debtors information is available. Finance expenses like interest on loan and profit on sale of investments. They will tell how much loan is there for each department. Based on that, we will segregate. But that after you do all of this, you'll identify each department-wise profits. Department-wise profits will be taken to general P&L account, and then we'll write the expenses which are not allocated. The tricks is not here. This and all you do very easily. Allocation. The trick comes when they're asked you to when they're asking you to compute the departmental manager's remuneration. Departmental manager's remuneration will be based on departmental profits, and such departmental profits should be considered after you eliminate inter-department transfers by profit ಅಂತ ಹೇಳ್ತಾರೆ. So profitability that is there will be considered other than the case when it is unrealized. It will be eliminated and then you need to come. Take it? Or no? There the trick lies like this. Department B has some stock which is lying in Department A. Department A has some stock which is lying with Department B. On that stock which is not sold by Department B, Department A's manager will not get commission. So what do? We'll find Department B's closing stock. They will tell 20% of the stock is still was from Department A. Of the Department B's closing stock, we do into 20%. That is the selling price of the goods. On that, profit has to be eliminated. Whose profit do we eliminate? Profit percentage of Department A will be eliminated from Department B stock. Are you getting it? So that's one thing that you should remember. Some case they will tell Department A stock is partly lying with Department B and Department C. Department B stock is partly lying with Department A and Department C. Department C stock is partly lying with Department A and Department B. So there you will write one box. Sending department, receiving department. ABC, ABC. Selling department's profit percentage you write. Purchasing department's closing stock you write. Corresponding department profits you minus. And then take it with the, let's say that receiving department's column total and then deduct it from that department's real. You're getting it? Such questions are tricky ones. Other ones are not. However, we'll quickly glance through the same. So this is one question where they want you to prepare departmental trading and P&L. Actually a pretty simple one, but let's quickly see this because there is inter-department transfer and unrealized profit in this. Got it? Come on, quickly see question number 9, Bombay Cotton. Bombay Cotton question. Page number 195. See this? Bombay Cotton has two departments, Department Y and Department Z. What's happening there? Department Y and Z. Yeah. Okay, done. Ready. Hold on. Fine, let's start. So opening stock of both departments 60/40 is available. What do? We'll write in each department's trading account. Departmental trading account, I'll write and 40. Now, then what do we have? Purchases. How much is purchases? 120 and 3,05,400. I'll write 120 and 3,05,400 purchase. Then we have wages 70 and 32. So nice, no? They have given 70 and 32. They've only split and then they've given. They've not asked us to split. Then there is sales of 310, 300, 372, 700. I'll write sales 310, 300 and 372. After that, we have closing stock 23, 700, 47. I'll write closing stock 23, 700, 47. After that, when I go here, we have expenses salary, rent, advertisement, general expense, depreciation. We don't know the basis. Don't know the basis. So we will wait. Expenses are to be allocated between departments in the ratio of gross profit. What ratio? We cannot find gross profit right now because we have not written inter-department transfers yet. They are not included in sales. Once we find GP, in that GP ratio will transfer. Now, we'll wait. Department Y sells goods to Department Z at a profit of 25%, and Department Z sells goods to Department Y at a profit of 28%. So what is Y's profit percentage on goods sold to Z? 25. What is Z's profit percentage on goods sold to Y? 28%. This we should use it to eliminate our inter-department profits. Remember to write Y when it sells the goods to Z, what is the profit? 25%. Z when it sells to Y, what is the profit percentage? 28%. You wrote these two. Remember this. This will be useful later. Then each departmental manager is entitled to commission of 10% on net profit, subject to unrealized profit on departmental sales being eliminated. As a sending department, if the goods that you have sent is with the other department and they have not sold such goods, such profit should be deducted from your profit. After deducting that, your commission will be computed. I am department Y. I have sent goods to department Z. Department Z has not sold certain goods and it's still remaining in their closing stock. Department Z's closing stock multiplied by department Y's profit percentage. Whatever we get unrealized profit should be deducted from department Y's profit. And then we'll identify the departmental manager's commission. Got it? Because I am department Y. When I send goods, who would have booked profit? I would have booked profit. So that profit should be eliminated. How much profit? Only to the extent it's not realized. Only to the extent it is not. Meaning I have sent to department Z. If they have not sold and in their closing stock, some stock is there what I have sent. On the stock of department Z, GP percentage of department Y or profit percentage of department Y should be deducted. So it should be applied. What GP we get or what profit we get should be deducted from department Y's profit. On that adjusted profit, department Y's manager will get remuneration. Very good. Then stock transfer during the year from department Y to department Z is 40. Okay, Y is sending, Z is receiving. From Y to Z. So Y ಗೆ sales ಎಷ್ಟು? 40. Z ಗೆ purchase ಎಷ್ಟು? 40. So in Y column I'll write credit side. In Y column I'll write credit side 40. In Z column I'll write debit side. Z ಗೆ purchase, Y ಗೆ sale. Understood? Similarly, sent from department Z to department Y is 50. Z ಗೆ sale, Z 50, Y 50. Understood this? Okay. No doubts. Now after this, what do we have? Closing stock includes transfer from department. Beta, we'll not go here. We'll do one thing. Before we do this, shall we identify GP and then segregate this salary, rent, advertisement, general expense, and depreciation? Yeah, actually we can finish this and then do that. What do you want me to do? Finish, continue reading the question. Okay, we'll do GP later. Closing stock includes transfer from department Y to Z 12 and Z to Y 21. So Y to Z 12,000. So 12,000 is there in whose closing stock? Z. Z closing stock has 12,000 rupees, which has come from Y. And department Z to Y. So Y's closing stock has 21,200. Correct? Let's do the working. Department Y's closing stock has how much? 21,200. Z to Y alva. Z closing stock ಅಲ್ಲಿ 21,200 ಇದೆ. Sorry, Y closing stock ಅಲ್ಲಿ 21,200 ಇದೆ. Z closing stock ಅಲ್ಲಿ 12 ಇದೆ. On this, we should apply the profit percentage. Correct? If the stock is there with Y, it is been sent by whom? Z. What is the profit percentage when the Z is sending? 28% on cost. Okay. 28% on cost is the profit margin on the stock. Department Y alliro stock, it has come from department Z. Correct or not? So if a department Y's profit has 25%, I am not going to apply 25% on 21,200. On 21,200, I should apply 28% on cost. This 25%, which is the profit margin of department Y, should be applied on the stock which is there in department Z. On your closing stock, you will not apply your GP percentage. If it is closing stock to you because it was purchased to you. If it is purchased to you, it is sale to somebody else. If it is sale to somebody else, they have made profit. Their profit percentage should be applied on my. Are you getting it? When we do in amalgamation, group 2 ಹೇಳೋದಿಲ್ಲ ಬಿಡಿ. Sorry, I thought of telling amalgamation ಅಲ್ಲಿ, consolidation ಅಲ್ಲಿ ಅಂತ ಹೇಳೋದು. I won't tell. Got it? Fine. So on department Z, in department Z, how much is there? 12,000. Who sent it? What is Y's profit? 25% on sale. This is actually selling price. So we can straight away do into 25 by 100. 12,000 into 25 by 100. ಎಷ್ಟು ಬರುತ್ತೆ? 3,000. Do you understand this? This 21,200 is there, no? This is selling price. Profit is 28% on cost. So what should we do? 28 divided by 120. How many of you did not understand why is it 28 by 120? Oh, you know that? So do 21,200 into 28 by 120. We get 4,630. Understood this? Hello, read this, whatever is there here. Onsati nodi nidanake. If you don't understand, I'll explain once again. Let me know if you don't understand. Yeah, you guys saw it. Read that what is written before below 4638. Unrealized profit. It should be deducted from stock of which department? Department Y stock. Profit of department Z. Department Y closing stock. My stock is more. No, will reduce from department Y stock. Profit of department Z. After we deduct from department Z profit, we'll compute department Z manager's commission. Department Z closing stock is 12. In that there is unrealized profit of 3. As an entity, if we see department Z closing stock of 12 should be reduced by 3. And that 3 profit, who has booked that profit? 5. So we should deduct from whose profit? 5. And after deducting 3, we should give commission to department wise. Understood? Shall we do that? Okay, we should know the profit before unrealized profit. That will get in net profit in departmental trade. To get that, we should find departmental GP. Correct or not? Shall we do that? Now here we understood. This much computed. To take this further, we'd have to finish it. Come on here. GP is the balance figure. ಎಷ್ಟು ಬರುತ್ತೆ? 7436 you understood? 7436 you bring here. 74 is to 46 is the ratio. All this expense, salary, rent, advertisement, general expense, depreciation, get it all in the ratio 74 is to 46. Once you do that, you get net profit of 22,213,800. This will be our starting point. I will start with profit before unrealized profit of 22,213,800. From department wise profit, how much do I deduct? 3,000. Why? Department Y has sold goods to department Z, because of which department Z's closing stock has gone up by 3. Department Z closing stock I deducted by 3,000. Department Y profit will deduct by 3,000. Department Y has stock of 21,200, which is increased by 4,638 because department Z has booked profit. I should eliminate 4,638 from profit of department Z. You getting it? Don't try to say idu alli adu illi angalla. Logic ಯೋಚನೆ ಮಾಡಿ. Who's sending? Who's receiving? Who's having closing stock? Who has booked profit? Stock should be reduced from which department? Profit should be reduced from which department? Think like that. Don't say this closing stock, that GP, this into this you multiply, deduct from here. If you try to do that kind of pattern and all, you will go for a toss. I'll tell you. Logic is something that will make you survive forever, not the format or mugging up. Please remember. So once we eliminate that, we get 19,200 and 9,162 as the profit. And remuneration should be given as 10%. Compute 1920,906. We will not write this in departmental P&L account. We will write this in general PL. That's it. Our departmental PL is over 22,200 and 13,800. We'll write here that 1920,906 also will write. That stock should be reduced, no? Because of which profits has to be reduced. That we wrote here, no, minus 3,000 and minus 468. Madadva departmental trading. No, there we can't do. We'll eliminate it from the general PL. 3,000 and 468. 7,638 is unrealized profit. The profit which will be transferred to P&L account of the whole organization is 25,520. So this question covers multiple adjustments. One, segregation of expenses. if in your material as well as IC study material, there are several questions where you only need to segregate the expenses and just write. And then next one, closing stock may profit included. This is interesting because this department has that department stock, that department has this department stock. Cross. There is one more variety of question where it's not cross. A in the B, B in the C, C in the D. That's the next kind of question. Got it? That's much easier. There A's profit percentage on B's closing stock, B's percentage on C's closing stock, C's percentage on D's closing stock. You have ಅಷ್ಟೇ ಮತ್ತೆ ಪ್ರಾಫಿಟ್ ವಾಟ್ ಎವರ್ ಗೆಟ್ ಒಂದು ಲೈನ್ ಈ ಕಡೆ ಮೂವ್ ಮಾಡಿ ಮೈನಸ್ ಮಾಡಿ ಬಿ ಸ್ಟಾಕ್ ಮೇಲೆ ಹಾಕಿರೋ ಪ್ರಾಫಿಟ್ ಪರ್ಸೆಂಟೇಜ್ ಎಲ್ ಮೈನಸ್ ಮಾಡಿ ಸಿ ಮೇಲೆ ಹಾಕಿರೋದು ಬಿ ಎಲ್ ಮೈನಸ್ ಡಿ ಮೇಲೆ ಹಾಕಿರೋದು ಸಿ ಮೇಲೆ and that's it. We'll get it and then you apply the percentage. That is much easier than this. It will become tricky when A sends it to B and C, C sends it to A and B, D sends to A. There you draw the table, you'll get it. That also I'll show it to you. Nododado? Any doubts in this? Next part is that part. I'll show you that part. And markup I wanted to do discuss in detail, but what has happened now is we are running short of time. Markup, there is one more video, 20 minutes, 20-25 minutes is there. Markup concept in department that you have no Kadi stock question and one more question. It is detailedly discussed. Concept also, not just the problem. Concept with solution. You can watch it at 1.5x speed. Search for that departmental stock, search accounts man or CA Rajavardhan, you will get it. Cover sheet may we put very big departmental stock memorandum stock adjustment there. You can watch it. 20 minutes is there. 1.5x speed note. So let me show you the other question that I was telling in department. Was that? One is simple. A in the B matra. Question that I was telling is A to B, B to C, C to D. This is the one. Department A has transferred goods to Department B. Department B has transferred goods to Department C. We'll identify Department A's profit percentage. Apply it on Department B. We'll identify profit percentage of Department B. Apply it on Department C. Department C sells it to outsider. A's profit percentage will be applied on B stock. B's profit percentage will be applied on A stock. Once we multiply, we get the profit. No, that profit will reduce Department B's cost. Department B's cost it will reduce. That same will reduce Department A profit. Are you getting it? Department D's C stock multiplied by Department B percentage, whatever you get, will reduce the closing stock of Department C, but profit of Department B. Are you getting it? This can become very lovely interesting where some part of the stock which is sent by Department A to Department B is now sent to Department C. But our questions, do you ever get that doubt? What if the stock which is sent by Department A to B, B sends the same thing to C and then charges profit on that, because of which on the stock unrealized profit of Department C, Department A stock also should be, profit also should be adjusted. No such questions in your material. It's not there. Don't worry. It's only two departments. ಆ ಥರ ಇಲ್ಲ, ನಾನೀಗ ಹೇಳ್ದೆ ಅಲ್ಲ ಹಾಗಿಲ್ಲ. ಸಿ ಹ್ಯಾಸ್ ಆಲ್ಸೋ ಸೆಂಡ್ ಗುಡ್ಸ್ ಟು ಎ, ಬಟ್ ಸೇಮ್ ಯೂನಿಟ್ ಹ್ಯಾಸ್ ನಾಟ್ ಟ್ರಾನ್ಸ್ಫರ್ಡ್. ಅಂದ್ರೆ ಎ ಸ್ಟಾಕ್ ಹ್ಯಾಸ್ ಗಾನ್ ಟು ಬಿ, ಬಿ ಹ್ಯಾಸ್ ಆಲ್ಸೋ ಸೆಂಟ್ ಸ್ಟಾಕ್ ಟು ಸಿ. It is not like same unit what was sent by A is sent to C. So on the C's closing stock, A should remove profit anta illa. That is not there. I've done all the questions. Not there. Don't worry. That will become very interesting, but adilla. See this. Department A closing stock 4,000. Department B's closing stock 14. On this 14, we applied Department A's profit percentage. Okay? Here we identified how much is Department A's profit percentage? 50% on cost. So Department A's profit percentage we eliminated from Department B's closing. And this will be deducted from Department A's profit before computing remuneration. And Department C's closing stock is there. No, on that Department B's profit is eliminated. And that will be eliminated from Department B's profit before computing remuneration. And total stock reserve, whatever reserve, will be adjusted in general PL. Okay, now this is question number 11. And only one last question I need to tell. Once I tell that, I will that one big table. No? One more question was asked in the recent exam, not in the last exam, in one of the recent examinations. That was there are several inter-department transactions, and based on all the inter-department transactions, they want you to pass one adjustment entry. Kolkata branch, Delhi branch, Bombay branch, Chennai branch, multiple branches are there. You will write plus minus plus minus. That one table you should learn how to do. That one problem you practice, and this is a very lovely one. Question number 3. Question number 3. So same thing what we did now. Yeah, it is not unrealized profit, but number of units, so opening stock, so everything has to be computed. That data is not given with us. You should find it. So question number 3, you try. No unrealized profit here, but question has little tricky. Second one and first one and all is lengthy. Just like that, they've given so many expenses. It is all multiplied by this, divided by this, multiplied by this, divided by this, multiplied by this, divided by this. So entire department, 3 variety of questions you need to be cautious. Number 1, inter-department transfers with unrealized profit. There are 2 categories. One, A to B, B to C, C to someone else. Or second category, A to B, A to B and A to C, B to A and B to C, C to A and C to B. There you draw the table. Inter-department transfer, understood? Second one, this many they will dump like this, you segregate. The second category. Third category, lot of inter-department transactions will be given. You need to write one net entry. Right, sending department, receiving department, plus minus, debit credit, you write. Take the total net difference ke one entry pass mark. That is one. And then the last one is that markup, markdown, markup value increased, markdown value decreased. Such based question. So that there's a separate video of 20 minutes. Just search markup, markdown or departmental markup, markdown question on YouTube. You will get it. Yeah. That's department. If you have anything specific in department, what's bothering you, please tell. I will be able to help you out. ಹೇಳ್ತೀರಾ ಏನಾದರೂ ಕಷ್ಟ ಇದೆಯಾ ಹೇಳಿಪ್ಪ ಹಾ to find it now, but it's there, guys. Shall we go to next chapter? What next? Hire purchase. Whatever you say. Five minutes ಮುಂಚೆ ಮುಗಿಸಿದ್ವಿ. We felt like we didn't do much in department, no? We didn't do much, we still spent 45 minutes. Okay, hire purchase. Shall we quickly start with hire purchase? Hire purchase accounting mein, the point totally revolves around 2 people, hire purchaser, hire vendor. Usually we sell the product and receive the consideration. I give the product, I take the consideration. Hire purchase mein what happens is I give the product, I receive consideration, I keep on receiving consideration. Meaning asset is transferred, consideration is received in installments, broken parts. Because consideration is received in broken parts, I'll receive money much more than what I would collect in one shot. If I give the asset to you now and you give me money, you give one amount, no? If I collect it in several installments, I will collect much more than that. Why? Time value of money. There is delay in collection, so you would charge interest and collect. Here, me being a seller, I cannot include interest amount as sale consideration. Interest is not sale. Interest means GST barata. Why? It is not sales. Interest means specifically GST is excluded. Taxation, costing, okay. So on that interest, I should not include. Sorry, on that interest I should not include in my sales. Interest should be written in P&L account. Sales should be written in trading account. So I want to segregate how much interest income, how much sale value, and you cannot capitalize that interest. To you, that interest is expense. Sir, why can't I capitalize borrowing cost? It can be capitalized only when the asset is a qualifying asset. And it is a qualifying asset only when the asset takes substantial period of time for setup. You buy car, what substantial period you want to set up? Start ಮಾಡಿ ಓಡಿಸೋದು ಅಷ್ಟೇ ಅಲ್ವಾ? You say you need to assemble the car in 1 year. It's not like it. It doesn't take 12 months, no, for you to set up the car. What do you mean by substantial period? Who told you 12 months? Who tells you? Accounting standard 16 ಹೇಳುತ್ತಾ? Accounting standard 16 only tells substantial period. The definition of substantial period reference is given in Accounting Standard Interpretation 1. ASI 1 says substantial period refers to a period of 12 months. That is not always 12. It can be sometimes less or sometimes more. It is professional judgment of the entity. Are you getting it? You should be able to convince the auditor when he comes that this is substantial period. If you don't convince him, then he will give qualified opinion. That's it. Then he will give qualified opinion. You will take 15 days also substantial period. He will tell this guy doesn't know accounting standards. He just tells that financial statements are prepared in compliance with section 132. 32. Financial statements of the organization should be prepared in compliance with accounting standards issued by FRA or NOCA. Correct? ಅಲ್ವಾ ಮಾಡಿರ್ಬೇಕು ಮಾಡಿಲ್ಲ ಅಂದ್ರೆ ಅಷ್ಟೇ section 132 non complete. I thought of telling no director's responsibility statement also DRS and 134 subsection 1 clause G, disclosure by directors that financial statements are prepared in compliance. 143 auditor's responsibility, 134 director's responsibility. Sorry. So interest and sale value should be recorded separately by seller. Interest and purchase price should be recorded separately by buyer. Why? Buyer cannot capitalize interest. Buyer has to treat interest as expense. The cash price of the asset is there. No, on that only he can charge depreciation. So the segregation is the need of that. That's the reason we do this hire purchase. In hire purchase, there are certain names that you should know. Number one, cash price. Sorry, two parties are involved. Hire purchaser, hire seller. How many parties are involved? Hire purchaser and hire seller. Hire purchaser is the one who's buying the asset, which is like hiring but is actually purchasing. The person who's selling is hire vendor, which is like giving on rent but is actually selling it. Are you getting it? He gets money installments. No, it looks like it's getting rent, but is actually sold the asset. Get this? No. The price at which the asset would have been sold, if not for hire purchase agreement, it's called cash price. The price at which asset is now transferred, total money receivable by the hire vendor from the hire purchaser, is called as hire purchase price. Are you getting it? So hire purchase price will be more than cash price, and the difference is because there is delayed payment. So such difference is called as interest. Such difference is called as. So point number one that you need to know is cash price plus interest is hire purchase price. Cash price plus interest is, or hire purchase price minus interest is cash price. Now let's see the points from the perspective of the hire purchaser. As an hire purchaser, we need to record the asset at what price? Cash price. We need to record the asset at, we should depreciate the asset at cash price. Are you getting it? Whenever you pay interest, remember to transfer it to expense. Don't write it. So initially, when the agreement is signed and you take the asset, you will pay a small part of the consideration. That's called as down payment. So when the asset is to be recorded, there are two methods of accounting in the books of hire purchase. Number one, interest suspense method. Number two, cash price method. I'll teach you cash price method first, and later I'll tell you how is it under interest price. What should be followed is actually cash price method, not interest. So you will record the asset that you purchased at its full cash price. You will write cash price account debit to, you didn't pay cash. You will write hire vendor. So this is like normal purchase entry if you pay the entire consideration at once. For the hire vendor, it is sales. He is supposed to receive money from purchaser. You will write purchaser account debit to hire sales, cash price. After this down payment, a part of the consideration is paid by the hire purchaser. So he will write hire vendor account debit to cash for that part of the amount paid. Let's say 1 lakh rupees the cost of the asset. What he pays is 10,000. So we'll write hire vendor account debit to bank account 10. This guy will receive 10. He'll write cash account debit to hire purchaser account 10. After 10,000 is paid, 90,000 is pending. That's not paid immediately. If it's paid immediately, it will be 90,000. Let's say it is paid in 3 installments of 30,000 at the end of each year. So at the end of the year, when he's paying 30, should also pay interest. For the first year, amount outstanding was 90. On 90,000, the hire purchaser should pay interest, hire vendor should collect interest. Let's say interest rate is 10%. On 90,000, 10% interest is 9,000. So when the hire purchaser pays the first interest, he should pay with interest. So first we will write interest. Interest is expense to hire purchaser. He will debit interest account and credit hire vendor, saying that he is liable to pay. How much? 9,000. Previous liability was out of 1 lakh purchase, 10,000 down payment made, 90,000 was due. Now we add 9,000 rupees interest, making it 99,000. And it is expense to hire purchaser, he'll debit interest. Payable to higher vendor will credit higher vendor. And higher vendor has to receive such interest from higher purchaser. Receivable debit higher purchaser account, and that is income. So we credit interest. After that, when the higher purchaser pays money, liability towards higher vendor is decreasing and the cash is going up. Liability decreasing, higher vendor account debit, cash is decreasing, cash account credit. This will be for 30,000 principal money and 9,000 interest money, 39,000. If he pays 39, this guy receives 39, will write cash to higher vendor 39. This interest what is credited here will be transferred to P&L as income. This interest what is debited here will be transferred to expense along with depreciation. So 1 lakh was outstanding, 10,000 was paid, 90 is there. 9,000 interest we had, 99 it becomes. 30,000 principal, 9,000 interest is paid. Balance will be 60. Second year interest will be 6,000. Second installment will be 36,000. Balance will be 30. Third year installment will be 33,000. That is 3,000 interest, 30,000 principal. We write the entry. We get this. In all the questions, they might not give you cash price, higher purchase price, interest price, and installment amount straight. Some questions they'll give cash price, but they won't give interest amount. Some questions they'll give interest amount, they'll not give cash. Some questions they'll not give interest rate, they'll not give cash price. They'll give you some relationship and installment amounts. Based on that, you need to come. Are you getting it? I know people follow slightly different approach. Where if the cash price is given, we do one way. If the cash price is not given, you do one more way. If cash price given, you write cash price minus down payment, amount outstanding, add interest, less installment, add interest, less installment. You do that. If cash price is not given, you do some horizontal table. Or no? If you do that way, my personal recommendation, if you're open, don't do that. Do it exactly like how we do normally. What is our usual order? Cash price, less down payment, balance, add interest, closing, add interest, payment, closing. Do it the same way. Correct or not? At the end, you write zero. Then you write interest. Correct or not? Do it backward like this. Don't do two different formats, is what is my personal opinion. Don't do multiple ways to the same problem. Whether the data is given like this or given like this, our approach to problem should be same. Are you getting it? Just because they are not given this, don't change the entire order. Same thing you write. Previously, we used to start here and write here. Or start here and then write here. Let the format be same. We'll quickly do a question or two. Or shall I straight away discuss reposition part? Reposition part. Should I not discuss the place where they have not mentioned cash price, or they mentioned interest rate? Interest rate is not mentioned. Some cases where they give installment amounts and then there's a principal amount in each installment is same. You know to do all of those? Okay. Okay. You insist. My responsibility to ask you people. I have asked. If in case you are very fine, I'll skip. So remember the question where they will give the interest rate, they'll give cash price minus down payment, multiply interest, deduct installment, that way. If they don't give interest, if they don't give cash price, assume that after all the installments balance is zero. Are you getting it? They would have given installment money, third, fourth, third, second, first. So fourth installment money is principal plus interest. Let's say principal is 100, interest is 10. Fourth installment is 110. If it is 110, how much is 10? How much is 100? You compute. 10 will be interest. 100 will be the amount before. Are you getting it? So after adding interest, this is the amount that you pay. Before adding interest, how much is that you can find? Backward you will find. That is the amount left over after paying third installment. Third installment money, you know. Add third installment money, you will get the amount before payment of third installment. Amount before payment of third installment is principal plus interest, 110. Divided by 110, multiply it by 10, you get interest. And you also get amount outstanding. Amount outstanding is after paying second installment. Add back second installment, you will get amount before second installment. That is 110. That is 110. Multiply by 10, divided by 110, you will get interest. You get principal. So that you add first installment, you will get amount before. You're getting that way? Yes or no? And when the dates are mentioned in the question, it is mandatory for you to write the dates in the ledger. Don't skip the dates. And this is an interesting question where they have not told you cash price. Cash price is given, down payment is given. They have told total installment is 2,50,000. Number of installments is 4. Installments are annual. Interest rate is not. Interest rate is not given. So if this kind of information is given, what you do is identify the total hire purchase price and identify the cash price. If you do hire purchase price and cash price, you will get total interest. Am I right? Total interest will never be equal in each installment. Interest will never be equal in each installment. Why? Whenever you do repayment, principal is reducing, no? Whenever the principal reduces, interest computed on that will decrease. Why? Time is same. Principal has reduced. Interest rate is constant. Interest has to decrease. Interest has to, in what proportion will it decrease? What do? Don't start with cash price. If you start with cash price, you don't know interest. Start with higher purchase price. Same table. Start with, from higher purchase price, deduct down payment. What you get? No, you don't have to add interest because it's already higher purchase price, includes interest. Deduct first installment, you get amount outstanding. Deduct second installment, deduct third installment, deduct fourth installment, it will become zero. But individually interest you don't know. But at the end of each year, you know the amount outstanding. Correct or not? That amount outstanding is there, no? In that ratio, you should segregate the total interest. Why? Amount outstanding, in that, on that only we compute interest. No, higher amount outstanding, higher interest. Lower amount outstanding, lower interest. See here, what did I do? We know cash price of 10 lakh. I identified higher purchase price, down payment plus amount per installment into number of installments. We got total higher purchase price 12 lakh, cash price 10 lakh. Installment my interest is how much? 2 lakh. How do we segregate it? If I start with cash price of 10 lakh and deduct down payment of 2 lakh, I don't know interest rate. I don't know interest rate to add. So I don't start with cash price. I'll start with higher purchase price. 12 lakh minus 2 lakh and 10 lakh minus 2 lakh 50 minus 2 lakh 50 minus 2 lakh 50 minus 2 lakh 50 0. Amount outstanding at the end of first year 10. Second year 750. Third year 5 lakh. Sorry, beginning of each year 2 lakh 50. On the beginning outstanding amount we identify ratio. No, 1, 2, 3, 4. May if you agree segregate you will get interest for each. Are you getting it? Now, if you want taking this interest, you can find the interest rate, but not required. Did you understand this? Yes or no? Okay. Okay. Then there is one more question where, one more variety of question where what is not available? Interest rate is not available and total interests are given. Cash price is also not given. In the previous question, what are they given? They are given cash price. They are given installments. They are given down payment. We identified total higher purchase price and identified cash price minus higher purchase price as total interest. So the total interest we segregated in time ratio, that outstanding amount ratio. This question number 7, cash price is also not given. Cash price is also not given. Then what do? We'll take down payment plus total installments to find higher purchase price. Artha, cash price in each installment is constant. Amount that we paid in each installment is constant and interest is going on decreasing. Interest is going on. Are you getting it? So let us say this first installment of 2,21,900 is some principal plus some interest. Correct? Second installment, whatever is that, is some principal plus some interest. Principal in this and principal this in this is same. Principal in this installment and principal in this installment is same. Identify the difference between 221,900 and 2,06,050. 15,850. That is the not interest. That is the difference between interests. First installment as principal plus interest for first year. Second installment as principal plus interest. Principal component in both installments are same. Interest component in first installment is more. Interest component in second installment is less. When I do 221,900 minus 2,06,050, what I get is difference between first and second interest. Allah. Logic. How did the interest decrease from first year to second year? Because principal decreased in the same proportion. We can't find interest rate using that. Why? We don't know interest rate. Now do it from second to third. Again, same successive difference will come. Why? Same amount of principal will be repaid. No. But using that, we can't find principal. Why? We don't know the interest rate. Are you getting it? When we see the last one, fourth one, and third one difference, do we get the same amount? Yes, we get the same amount. Same amount. That itself is interest. Why? There is no fifth installment. No. When we say first installment minus second installment, it is differential interest between first and second. That is excess of first year interest over second year interest. Because principal is same. When we say second and third difference, it is excess of second interest with third interest. Third to fourth, excess of third interest with fourth. Fourth to fifth will be 0. So whatever you find as difference, that is fourth installment by interest. Deduct that interest from this 174,350. You will get to know how much was principal repeat. You know principal, you know interest. Relationship is interest rate. Logic karta hai. You do this. I'm not telling you don't. But you chumma minus minus, you say successive this amount difference. That is the interest. That is not interest. That is difference between the interest of 1 year and the other. The last year, if the same amount is difference, that becomes interest paid. When we eliminate it from installment, we get principal. You getting it? See here, I'll show. Here, interest is there, no? Year difference, first and second, 15,850. Second and third difference, 15,850. Third and fourth, 15,850. Fourth, 15,850 is interest for fourth year in that. So what I do, same table. I'll write cash price, Guttila. Whatever is in gold color, I don't know. Whatever is in gold color, I know down payment. I know first installment. I don't know interest. I know second installment. I know third installment. I know fourth installment is 174,350. Closing is 0. After that 174,350. So amount outstanding before that 174,350. Interest I get to know here 15,850. If interest is this much, I will find this. Then I'll write principal is 1,58,500. Interest is 15,850. So interest rate will be 10%. Then start with 10%. Till in the ಬೇಕಾದ್ರೆ start ಮಾಡ್ಬೋದು. Oh, cash price ಗೊತ್ತಿಲ್ವಾ? Okay, here also we can do like interest rate, no, 10 by 110. 10 will be interest, 100 will be principal. You can work it backwards. And once you have all of these numbers, no, I don't think you have any difficulty preparing the ledger. Do you? No? Understood? Comes to the last part of the chapter. I discussed all the varieties for computation of cash price and interest component in each installment. Now coming to the last part. Last part is repossession. What is it? In the event of hire purchaser not paying, the event of hire purchaser not paying the installment, hire vendor has the right to take the asset back. If the asset under hire purchase agreement is more than one, then hire purchaser might not give all the assets. He might give part of the assets because he's paid part of the consideration. That is called partial repossession. If asset under consideration is only one or all the assets are taken over by hire vendor, then we call it complete repossession. Complete repossession is the easy thing. You know why? Hire purchaser as liability, hire vendor as asset. Hire purchaser as liability, hire vendor as asset. Hire purchaser's liability is hire vendor. Hire vendor's asset is hire purchaser. Hire purchaser as asset also. He keeps paying the interest and EMI or installment. Asset will be his. The day he stops paying it, what happens? Hire vendor will take this asset. Hire vendor will take this. Now, what is the value at which this asset should be recorded? Very simple. I am hire vendor. I want to receive money from you. How much is outstanding balance from your books? So much cash I should receive. If I don't receive cash and take over the asset, asset will take that value. Asset will take that value. I'll record the asset at the same value of my asset receivable from you. You should give me 10,000. If you don't give me 10,000, I'll take your phone and then go. Now, what is the value of that phone in my books? 10. Non-cash consideration received. Understood? 10,000. If I sell it for 12, 2,000 profit. If I sell it for 9, 1,000 loss. That's how you should account. For hire vendor, it is called goods repossessed. For hire vendor, it's called goods because after I take the phone, I can't ask you for extra money. After I take the asset back from you, I can't ask you for money. So the goods repossessed value will be the amount receivable from hire purchase. To you, liability is there. You have to pay money. You didn't pay liability, the asset is gone. Asset book value and liability book value will adjust. The asset value was more than liability, loss. Are you getting it? If asset value was less, liability was more, profit. Close the books. That's it. You don't have to pay me any rupee. I don't have to collect any rupee. In your books, what you do is hire vendor liability will be there. No, you will transfer that liability to asset account. Balancing figure in asset account is profit. In my books, whatever the goods that I take from, I will in my hire purchaser account in my books. There is one asset. No, that value I'll give to my goods. If I incur repair expense on that, I will add. After I sell, I'll book profit. This is for complete repossession. In hire vendor's books, hire purchaser account will be closed by transfer to goods repossession. In hire purchaser books, hire vendor account is closed by transfer to asset account. Balancing figure in asset account, profit or loss. Here mine receivable value will become goods repossessed. If I sell it, I'll make profit, not before I sell it. Are you getting it? Partial repossession means assets under agreement is there. No, only part of it I'll take. So agreement is still there. After I take over this asset from you, I assume that I sold 3 bikes to you on hire purchase. I took over 1 bike from you for non-payment of installment. Now against those balance 2 bikes, what is there with you? How much money should you pay me? Don't know. You should find the value. How do we find the value? That goods that I'm taking, no, that value we should agree. That value we should find. How do we agree? I am in the dictating terms. I will tell 30% WDV depreciation. You might have done 25% SLM on that. I don't care. We will find a new value for this goods repossession. We'll find a new value for this. How do we get to know it's partial repossession? In the question, they'll give two depreciation rates. In the question, if they give two depreciation rates, one is for hire purchaser for his normal accounting, one is for finding the value of goods. So for this goods repossession, we'll find the value. To that extent, your asset will decrease. To that extent, your liability will decrease. Let's say asset value is 10,000 in your books. That new depreciate value is 9,000. 1,000 rupees loss. Can't tell. So you'll transfer that asset at that value to your liability hire vendor. So your liability will reduce to that extent. To me, that agreed value is no, that will become the value of this goods. And to that extent, my asset hire purchaser account will decrease. And on this goods deposit, I can incur expense and then I can sell it. After I sell it, I book. Is it what you should? Goods repossession 2, partial and complete. I'll give you a minute. Please read. I'll also take a small. Read this. Or you want me to add a column to this? Now, make sense? Same thing what I explained or something new? What is somewhere in type it in the language that I use. These are the entries for goods repossessed in both the books. And I've also put one question on repossession in this only. You can try it. This is again a question from ICA study material. This is also there in our material for those who don't have the material. Where I've shared the material also. I shared group 2 no yesterday. Today I share group 1 material, group 1 Excel sheet and whatever is sent for group 1. Fast track revision material of group 1 and for fast track. Hire purchase done. There can be one theory question from hire purchase chapter. People ignore this to the core, but please read it. Difference between hire purchase system and installment system. Read that theory question. ಕೇಳ್ತಾರೆ ಒಂದೆರಡು ಸತಿ ಕೇಳಿದ್ದಾರೆ 4 marks or 5 marks. I'm not expecting this, but this is my observation. Whenever paper becomes difficult, students say difficult. If I observe, paper will actually be not difficult. Paper will be lengthy. A question which could have been given for 12 will be given for 10. Question which could have been given for 8 will be given for 6. In such papers, it will become tricky and you are forced to answer those questions which are lengthy. You know why? They'll give some questions what you didn't expect. And that's where it becomes difficult. What is the questions that you didn't expect? They'll give a theory question like difference between hire purchase system and installment purchases. 4 marks. That is not going to take time, but you don't know the answer. So you're cornered if they put two, three such, one more ESOP question, sorry, ESOP group 2. So one more theory question they'll put. Or in the last attempt, if you see accounting standards, they had questioned one decision making question. No matter how many questions you would have solved in accounting standards, you would have done that. But it was basic decision making like how you do in costing types. After you compute, you should tell whether this discount togolod better option or interest shares payment of best option. You should decide. There was one consideration to be paid for purchase of an asset or inventory with interest option is there, delayed payment, discount, immediate settlement option is there. So you will check both and decide which is the best option. That you would have never done question like that. But that is basic decision making. That will take very less time. But in the exam, now here when we sit now, we'll say, hey, easy, madbud. But in the exam, when you see that question, you will freak out. Your instinct will not be to solve that question. So that is an easy one which takes lesser time. You will be forced to skip that and you will be taken to a question which is lengthy. Are you getting it? So difficult paper is lengthy with trick question. Trick question is easy and less time taking, but you will be tricked to take a lengthier question. And you take up lengthy question, you won't finish it in time, and you will complain that it is difficult. So such silly ones, it would not take too much time for you to read. 5 minutes, 10 minutes. Are you getting it? To read these things off. Difference between what to say higher purchase system and installment purchase system. You don't have to mug it up, guys. Like how you read for second PUC or BCom. You read it once, you'll remember 3-4 points. You don't have to use the exact same language. You write it somewhere around the bush, you'll get the answer. Are you getting this? Yeah, then don't write Kaunre and all you don't write. Just write the answer what you know. Yeah, that's it. Shall we go to next one? ಓಕೆ 11 ಗಂಟೆಗೆ ಇಷ್ಟು ಮಾಡಬೇಕಿತ್ತು. 12:30 ಅಂತಾನೆ ಹಾಕೋಣ. ಎಲ್ಲ ಬಿಡ್ರಿ. ನಾವು ಈಗ ಬ್ರೇಕಾ? ಇಲ್ಲ ಇಲ್ಲ. ವಿಲ್ ಡೂ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಆರ್ ರಿಡಂಪ್ಷನ್ ಆಫ್ ಡಿಬೆಂಚರ್ಸ್ ಆರ್ ಇನ್ಕಂಪ್ಲೀಟ್ ರೆಕಾರ್ಡ್ಸ್. ಪ್ರಾಬ್ಲಮ್ ಮಾಡೋದು ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್. ಓಕೆ ಕಮ್ ಇನ್ವೆಸ್ಟ್ಮೆಂಟೇ ಮಾಡೋಣ. ಬ್ರೇಕ್ ಇಲ್ಲ ಅಲ್ಲ? ವಿಲ್ ಫಿನಿಶ್ ದ ಕ್ಲಾಸ್ ಅಂಡ್ ವೈಂಡ್ ಅಪ್ ಆರ್ ಶುಡ್ ಟೇಕ್ ಬ್ರೇಕ್ ಅಂಡ್ ದೆನ್ ಕಂಟಿನ್ಯೂ ಪೋಸ್ಟ್ ಬ್ರೇಕ್? ನೋ ಪಾಯಿಂಟ್. ವಿಲ್ ಟೇಕ್ ಬ್ರೇಕ್ ಅಂಡ್ ವಿಲ್ ಫಿನಿಶ್. ಯೂಸ್ ಮಾಡಿ ಟೈಮ್ ಮನೆಗೆ ಹೋಗ್ಬಿಟ್ಟು. ಚೆನ್ನಾಗಿ ಓದಿ ಆಯ್ತಾ? I'll try and record it and then yeah. I won't be able to do it in such quick time. If I do also, I'll be showing screen like this and I'll be telling, or I should open one PDF and then underline. It can be done much better. So I'll tell you people out. Yeah, 12:30 to ಎಷ್ಟು 1. How do you want me to solve this? You want me to solve it by blanking out the entire answer or let the answer be there and then just highlight. Okay, I'll do the question that someone asked in the class. Actually, a nice question. It has everything in it. It has bonus issue, it has right issue, it is you asked. It has conversion of current investments to non-current investments. It has varied income bearing securities as well as it has fixed income bearing securities. Blank out ಮಾಡಿ ನಿಮಗೆ ಹೇಗೆ ಬೇಕೋ ಹಾಗೆ ಮಾಡೋಣ. Oh, you thought one question will not have everything. You might end up doing more than one question ಅಂತ ಅನ್ಕೊಂಡ್ರಾ? 5 ಕ್ವಶನ್ ಮಾಡಿಸ್ತೀನಿ ಅನ್ಕೊಂಡ್ರಾ? 5 ಏನು? This is exam question. I'm not kidding. ರೂಪಿಂಗ್ ಸರ್ ನಮಗೆ ಕೇಳಿ ಅಂದ್ರೆ ಸಾಕು ಸರ್. ಐ ಥಿಂಕ್ 15 ಮಾರ್ಕರ್ ಅನ್ಸುತ್ತೆ. 20 ಕೇಳಿದ್ರಾ? ಅಲ್ಲ ನಾವು ಅನ್ಕೊಂಡಿದ್ದಲ್ಲ, ಅವ್ರು ಕೊಟ್ಟಿದ್ದೆಷ್ಟು ಅಂತ. ನಾನು ಕೇಳಿದ್ರೆ 100 ಮಾರ್ಕ್ಸ್ ಕೊಡಿ ಅದಕ್ಕೆ ಅಂತ ಹೇಳ್ತೀನಿ. ಗೊತ್ತಿರೋರು ಖುಷಿ ಪಡ್ತಾರೆ, ಗೊತ್ತಿಲ್ದಿರೋರು ಅಯ್ಯೋ ಒಂದೇ ಒಂದ್ ಕ್ವಶನ್ ಬಿಟ್ಟಿದ್ದಲ್ಲ ಪೋ ಅದೇ ಬಂದ್ಬಿಡ್ತು. ACCMA, that's what will happen. There'll be 4 questions or 5 questions. You also say 5 questions, but you will have sub questions. They'll have only 4. ಒಂದೇ ಕ್ವಶನ್ 20 ಮಾರ್ಕ್ಸ್. ಇಲ್ಲ, I used to teach previously. Taken a couple of batches. And there it's so unique that the big case law is that you don't have to write anything. ಅಲ್ಲೇ ಕೆಳಗಡೆ ಸ್ಪೇಸ್ ಇರುತ್ತೆ. You can drag and drop. Type the answer theory. You can drag and drop a word page type and then you can type the answer. You want to prepare balance sheet. There's a small spreadsheet. Drag and drop tool. They have their own tool. Drag it and then drop it. Excel sheet format will come. Hint won't be given, but you would have to. It's actually spreadsheet only. You can put that. You're allowed to use calculator and everything. So certain questions they'll ask PPT also. Make a presentation on this topic. Summarize this topic PPT. So you would have to make PPT 3 slides or 4 slides there. Conclusion. Basically, like now someone comes to you for consulting. You need to give them a conclusion, not to the client. How do you give conclusion? Don't write answer. Conclusion. Make it a presentation ending. You don't have to make it like zui barbeku, zui. Just type it and then do it. Yeah. And examination can be taken from home. but one-to-one evaluator will be there. Me writing the answer, I'll have a specified invigilator who is doing work from home. For you, he will be doing work from home. His job is only seeing you like this. You won't be able to see him. Okay, that's the problem with ICI. If ICI has to put so many students, some students, so students will be sleeping. Then evaluators, yeah, our scale, mein, that is the problem. But it's matter of time. I'll tell you today. Today, everyone, whenever they teach accounts, costing, taxation, wherever you do writing. You should write on the board. We switch to writing on the device. You just take a little comfort as a faculty, but that's not the development. You should use the tools that's available. Once you become a chartered accountant, next day you will never write a balance sheet. You will always prepare it on Excel. You have to use the modern age tools. What you're going to do after you qualify to qualify. Only then you are actually qualifying. Otherwise, till that day you did balance sheet writing in paper, and suddenly that day you do it. And audit report, till that day you write points of audit report in theory in paper, and suddenly one day you are seeing in word, you don't understand. So you should start doing exactly like how you do post qualification to qualify. That's the real change that I'm expecting, and it is matter of time. The next half a decade or max to max a decade, CA examinations will be online. You will be taking exam at home. Huh? Not me, you will. No, no, okay, not you. I'm going to say the students will be taking the examination at home. It will be computer based examination, and things will be, you can use a spreadsheet, you can use Word, you can use, what to say, PPT, and it will become very practical on that day. So we are the early movers. Already since last 3 years, I'm using Excel. Let's get started. 17th one. Ready? Mr. Z has made following transactions during the financial year 2020-21. Investment 1, 8% corporate bonds. This is fixed income bearing security. Interest income is 8% on the nominal value. Nominal value is 100 rupees. And we can go on computing interest for this. But next one, equity shares is variable income bearing security. The moment it is variable income bearing security, we will not write dividend till the time it is declared. So what we do in the case of corporate bonds is, when we buy, if it is cumulative of interest, we won't write it in the amount column. We'll take it outside, identify the interest in that accrued till that date, deduct the interest, write interest in interest column, write the amount, X interest amount in the amount column. I told you yesterday, no, why to do that? Not yesterday, day before yesterday. Towards the end, X interest comment. That's what we do. With regard to equity share, we won't be able to do that. The value will be cumulative of dividend for last year, but we don't know. So we'll write in amount column. Later, when we receive dividend, such dividend will be deducted from that value by writing on the opposite side amount. Will I repeat? For a fixed income bearing security, if the date of purchase is other than the date on which interest is allowed. Now here, when are we buying? 1st of June. Interest is given on 30th September and 31st March. Interest is given on 30th September and 31st March. So when I sell it to you and you buy it on 1st of June, against that bond, already April, May, 2 months interest is accrued. 2 months interest is, so when I collect 86 rupees, it is cumulative of interest. So that interest is not your expense. You pay it to me 2 months interest. Later company will give you 6 months interest. So your income is 4 months. It is reimbursement. So you should not include 86 rupees as your cost. From that 86, you should eliminate the interest. So what do? You will write 36,000 into 86. How much? 36,000 into 86. How much? 1st of June 2020. Yeah, 36,000 bonds have been purchased. Cumulative of interest price. One column entry madbeka. Okay. Now tell me here. How much is the cumulative of interest price? 36,000 into 86. 30 lakh 96,000. This is including interest. I should eliminate interest. How much is interest? 8% on 36,000 bonds into 100 rupees nominal value for 2 months. How much do we get? 48,000. Correct? 48,000. 36,000 into 100% to 8% into 2 by 12. So in this, excluding interest price is actually 30 lakh 96 minus 48, 30 lakh 48. You will pay consideration of 30 lakh 96,000. How much consideration do you pay? 30 lakh 96. In the investment ledger, when you write here, 1st of June 2020 to bank account, this is 36,000 bonds purchased. In the amount column, you will write 30 lakh 48. In the interest column, you write 40. You paid 48,000 for interest, not for investment. Investment value is how much? 30 lakh 48,000. Nominal value is 36 lakh. You understand this? For debenture, for bond, for preference share, you will be able to find the interest component included at the time of purchase. For equity share, how will you find? Dividend percentage, sir. Equity shares dividend percentage is announced on declaration only. Till the date of declaration, we don't know dividend rate. Why? Dividend is proposed by board, declared by general shareholders, no, in the meeting. Till then, you don't know. So you will write amount column only, including dividend amount. But that pre-acquisition dividend should be adjusted. Call it pre-acquisition dividend. This is pre-acquisition interest. Interest for the period before we acquired. When did we acquire? 1st of June. For what period is this interest? 2 months. Which 2 months? April and May before I acquired. Similarly, for dividend, I should deduct, but I won't know. So what will I do? I'll write it in the amount column. When I get to know the dividend, I will not write it here minus. I will write it on the credit side in the amount column. That is the treatment of pre-acquisition dividend. Whenever dividend is received for a period, before we acquired it, it will not be written in dividend column and transferred to P&L. Instead, it will be written in the amount column on the credit side to reduce the cost of investment. In this question, there is pre-acquisition dividend also. There is post-acquisition dividend also. Understood this 30 lakh 48? Okay. Next, what is there after that? 15th of February. Every time before you write the transaction date, just check is there interest date. Interest dates are 30th September, 31st March. After 1st of June, before 15th of February, isn't there 30th September? 30th September, what happened on that? 30th September, 2nd of October. Oh, you remember? They go, no, 2nd of October. 30th of September, everything was fine. Done. 50. ಗುರೂಜಿ ಮೀಟ್ ಮಾಡಕ್ ಹೋಗ್ತಾರೆ, ಪ್ರವಚನ ಕೇಳಕ್ಕೆ ಬಸ್ ಹತ್ಬಿಟ್ಟು ಫ್ಯಾಮಿಲಿ 4 ಜನ ಹೋಗ್ತಾರೆ, ಮೂವಿಗೆ ಹೋಗ್ತಾರೆ, ಊಟ ತಿನ್ನಕ್ ಹೋಗ್ತಾರೆ. ಈಗ ಮೂವಿನೂ ಕನೆಕ್ಟ್ ಆಗಲ್ಲ ಜಿ. ನನಗೆ ಎವ್ರಿ ಟೈಮ್ ವೆನ್ ಐ ಆಮ್ ಡೂಯಿಂಗ್ ಕ್ವಶನ್ ಸಮ್ವೇರ್ 2016 ಬಂದ್ರೆ ಮೋಸ್ಟ್ ಪೇನ್ಫುಲ್ ಇಯರ್ ಇನ್ ಲೈಫ್ 2016. No, don't ask again. 2016 Virat Kohli 973. We lost in semi-final. Shane Watson, KL Rahul, Virat Kohli yet to bat 134 runs in 12 overs. Still lost the match. ABD Williams also batting. How? 2016. Fine. Get back here. So we will write interest on 30th September. On 30th September, how many bonds do we have? 36,000. What is interest rate? 8%. 36,000 into 8% into 100 into 6 by 12 by 6 months interest. How much? Got it? What is the entry? Bank account debit to interest. Bank account debit to this interest column is there, no? This is actually representing interest account. So I will write here 30th of June 2020 by bank. This is interest. How much? 36 lakh into 8% into 6 by 12. Okay. Fantastic. What's after that? 15th of February, sold 24,000 bonds at 92 x interest. That 92 doesn't include interest, so don't deduct. If they say cumulative, you deduct. If they say it's already excluding, you don't have to deduct. How many? 24,000 into 92. 15th of February. Shall I write 15th of February? What is the entry? Bank account debit to investment account. How much do we receive? How many debentures? How many bonds are sold? 24,000. 24 lakh is the nominal value. Amount received is 24,000 into 92. ಎಷ್ಟು ಬರುತ್ತೆ? 22 lakh 8,000. This is sale value. This on that interest also we will collect when we sell. They have not included, but we collect separately. How much interest? 24 lakh into 8% into what is the last date of interest before 15th of February? November, December, January, February Arda. 4.5 half. 4.5 months. What do we get? 72. You write this. Now, same to same thing. We'll actually show it to you in the form of working note also. 15th of February. X interest price 22 lakh 8. Why 24,000 into 92? There is no interest to be deducted. 22 lakh 8 is the sale value for. What is the interest on this? 24,000 into 100 into 8% into 4.5 by 72. Now, every time you write sale, you should check whether there is profit or loss. Every time you write sale, you should check whether there is profit or loss. Now, there is only one item purchased. So, it is from this only. If there is more than one asset, more than one set of investment purchased, then we should check whether we should apply first in, first out or weighted average. Here, though, no confusion. Why? If we are selling, we are selling from the 36,000 bonds only. What is the cost of the 36,000 bonds? 30 lakh 48,000 is the cost for 36,000. 30 lakh 48 divided by 36. Do it. 30 lakh 48,000 divided by 36,000. What do we get? 84.67 per bond. How many bonds are sold? 24,000. Multiplied by 24. 20 lakh 39,000. That, my friends, is the cost. Correct or not? So 30 lakh 48 divided by 24 into 24 divided by 36. How much do we get? 20 lakh 32 is the cost. Selling price is 22 lakh 8. Profit or loss? Selling price is more. ಅದು ಜಾಸ್ತಿ ಹೊತ್ತು ನೋಡಿದ್ರೆ ಹಂಗೆ ಆಗುತ್ತಿಲ್ಲ, ತಲೆ ವರ್ಕ್ ಆಗಲ್ಲ. 1,76,000. You get it? Yeah, 1,76,000 profit. It should come in P&L account credit side. Correct or not? So in investment account debit side, I'll write here profit on sale 1,70,000. This consideration 22 lakh 8 is there. No, it is more than cost. So to reduce it, I'll write here. Getting the logic? Any other transaction for bonds? End of the year, 31st March, you should write interest and then close the year. 31st March will receive interest. On how many bonds will we receive? 36,000? No, that 36 you sold 24. You will receive only on the balance. Yeah, how much? 8,000 bonds into 8% into 6 by 12. 8,000. Sorry, 12, 36 minus 24. 12,000 bonds. 48,000 is the interest. That's it. First close the interest column. Interest column is nominal account. Will be transferred to P&L. 144 plus 72 plus 48. 264. 264, you remember? Rohit Sharma. 264 minus 48. 48, 148, you remember? MSD. Pakistan 183, Sri Lanka. Okay. 216 minus 48. Sorry, 264 minus 48 is 260 to P&L account. What is 216 bandi? 221, 222, 219. I'll drive it. Innondu 271 ಇದೆ. Trade reverse sweep ಅನ್ಕೊಂಡು last double. P&L account 2,16,000 transfer. Then nominal value 36 lakh ಅಲ್ಲಿ 24 lakh you sold. No, balance 12 lakh is balance carried down. 12,000 bonds. What is the value of it? Balancing figure. 30 48 plus 176, 32 24. 32 24 minus 22 lakh 8. 10 lakh 16,000 is the balance carried down of bonds. You understand this? This was much simpler because there was only one set of investment. If there is more than one, let's say there was two purchases and you're doing sale, how to find cost? Two methods. One, first in, first out. Two, weighted average. If you're doing weighted average, add amount of this purchase and the next purchase. Divide by number of bonds of first purchase and second purchase. We'll get the average price. That you multiply by number of bonds sold, we'll get the answer. And whenever you do weighted average, without smallest of the hesitation, straight away find the closing balance as balancing figure. That is weighted average. First in, first out, what you should do? There is this first purchase, there is this second purchase, and there is opening stock also. Opening stock is the units that you sell first. If units that you are selling is less than the number of units that is there in opening stock, very simple. Opening stock value divided by opening stock units, that is the price, over. If opening stock is 100 units, sale is 120 units. 100 units is sold from opening stock, 20 units is sold from first purchase. So we'll find the cost for 100 units and 20 units separately and then add them to find total cost. That is first in, first out. Very good. If in case there is pre-acquisition dividend on such item, or that opening stock pre-acquisition dividend, what is there, we should deduct and then find the. ಅದಕ್ಕೆ ಯೂಶಲಿ ಫಸ್ಟ್ ಇನ್ ಫಸ್ಟ್ ಔಟ್ ಮೆಥಡ್ ಮಾಡೋದಿಲ್ಲ ಕ್ಲಾಸ್ ಕಷ್ಟ ಆಗುತ್ತೆ doable, it's not impossible. Once you get the logic, this is a very nice chapter, very nice chapter. You'll love it. Shall we do the next one? Equity shares. Shall we do equity shares? Okay. 1/4/2020 opening balance 8,000 equity shares at book value 190. This is the opening value, correct? Shall I write here debit side 1/4/2020 balance brought down? How many equity shares? 8,000 at what value? 190. 8,000 nominal value is 10, 80,000. 8,000 into 190, how much is that? 15 lakh 20. What is 15 lakh 20? Opening balance. 15 lakh 20 is, what is happening after opening balance? We have purchased 7,000 equity shares at rupees 230 on come right basis. It includes the right. Don't have to adjust anything. Remember that there is brokerage of 1% also. On purchases, brokerage will get added to the cost. On sale, brokerage will get reduced from the cost, reduced from the sale consideration. Here they have given here only 1%. Sometimes you know what they do? ಇಲ್ಲಿ ಪರ್ಚೇಸ್ ಆನ್ 230 ಅಂತ ಇರುತ್ತೆ, 7,000 ಇಲ್ಲಿ ಸೇಲ್ ಇರುತ್ತೆ, ಇಲ್ಲಿ ಪರ್ಚೇಸ್ ಇರುತ್ತೆ, ಎಲ್ಲ ಇರುತ್ತೆ. You do everything, come here, at the end they'll say prepare investment account considering brokerage of 1%. You get it? So always check if there is brokerage. Some questions will have stamp duty also. Brokerage 1%, stamp duty 50.5% or something. Stamp duty should be incurred only and only on purchase. Stamp duty only and only on, not on sale. Stamp duty will be incurred by the buyer. No, I am selling the product to you. I am selling the asset to you. Who is eager to get it registered? You or me? You. Who will pay stamp duty? You. You will say you won't pay. You want me to pay. I won't pay. You also don't pay. Let it be in my name only. Registered in my name. You give consideration. You start using. When my kids come, they'll file a case on you, and my kids and new kids, let them become friends and go to court every month. Now, who is interested in getting it registered? You. Who will incur stamp duty? Buyer, not the seller. Not the seller. Are you getting it? If they give stamp duty, charge it on the sale consideration only. Sorry, purchase cost only, not on the sale consideration. Next thing is, whenever there is brokerage, should we compute brokerage on X interest price or cum interest price? Whatever is given in the question. For one transaction, they have given cum interest price. For one transaction, they have given X interest price. What will you do? For the first transaction, you will do it on cum interest price, what is given. For the second transaction, do it on X interest price, what is given. Because the broker doesn't understand interest. Broker will ask, what price are you selling? 120. What price are you buying? 120. Give me commission on 120. You both will say, you are buying at 100 rupees. He is selling at 100 rupees. I will charge commission on 100. Interest you are settling from separately. That I won't charge commission. If in the agreement you mention cum interest price, broker will charge commission on cum interest. In the agreement you mention X interest price. Interest is settled between the parties separately. Then broker will not charge commission on interest. Are you getting it? So interest is computed, brokerage is computed on X interest price or cum interest price. What is mentioned for each transaction? It can be different. For first purchase, you might charge it on cum interest price. For the second transaction, you might compute on X interest price. You did, but you forgot now. Now you remember? Yeah, in Marnaida. We wrote this. Shall we write this purchase 7,230? Shall we have a look at the working? 1st of May 2020. Just already. After this break, then we'll discuss. Sum right price is how much? 7,000 into 230. 16 lakh 10. Are you getting it? 16 lakh 10. Brokerage 1%. 16,100. 16 lakh 26,100 is the purchase price. Agreed? In our investment account, equity share, I'll write here 1/5/2020 bank account 7,000 equity shares, 16 lakh 26,100 is the purchase price. Nominal value is 7. You usually tend to prepare a column here called as number of equity shares. I would recommend you to write number of equity shares here and prepare nominal value column here. Why? If you prepare number of equity shares column here, when you have to do interest, again you will do into number of unit value, number of nominal value per share. If you write nominal value, it will become easier. It will become easier. If you want to remember number of equity shares, write it below the transaction in the inner column so that you have both the kinds of data available. So the probability of doing mistake will reduce. Okay, after this bank 16/26/100. Next, 15/6/2020. Company announced a bonus issue of 2 shares for every 5 shares held. 2 shares for every bonus issue. How many shares do we hold on that date? 8 plus 7, 15. 8 plus 7, 15. 15,000 shares into what is the bonus ratio? Divide by 5, multiply by 2. 6. Nominal value 10. 60,000 nominal value shares you receive free. Do you give any money? No. Bonus issue andre free. I'll write 2 bonus issue. I'll write only the nominal value column. Amount column it will be 0. Amount column it will be only nominal value of shares will increase. Number of shares will increase. Now you don't have what to say 15,000 shares. You have 8,000 plus 7,000 plus 6,000. How did you get 6? 8 plus 7, 15 divided by 5 into 2. Artha aita? Very good. What's after this bonus issue? 1st of August. Company made right issue of 1 share for every 7 shares held. 1 share for every, how many do you hold? 8 plus 7, 15. 15 plus 6, 21,000 shares. 1 share for 1 right share for every 7 shares means 21,000 divided by 7. 3,000 right you get. 3,000 rights, not 3,000 right shares. You can make it 3,000 shares. What did you do? 30% of his entitlement was sold. 3,000 only 30% is sold. That is 900 is sold. Correct? Huh? Correct? No? Then how much is entitled? 70%. 2,100 shares are bought. At what rate? Sorry. 230. This that 900 shares into 75 money you get. No? What do we do? Should we write it in amount column credit side? Decrease in cost of production. This is not sale of scrap. Decrease in cost of production, manufacturing account credit side and break. So this will be complete amount will be considered as income and it should be recorded in P&L account credit side. Long ago they used to write this in investment account credit side. After that accounting at 13 got revised. Thenceforth we are not allowed to write it in the investment account credit side. We will straight away write it to P&L. I'll show the same working note once. Enjoy. On 25th of August. What's happening? Right shares entitled. 1 for every 7. We have 21,000 shares. So how many rights will we get? 3,000. In that, what are we doing? Sold is 3,000 into 30% into 75. 6,750 transferred to P&L. And purchased 3,000 into 70% into 230. How much do we pay? 4,83,000 we pay. 2,100 shares we get. Am I right? Say something. I'll write here 25th of August to bank account 2,100 equity shares, 21,000 nominal value, 4,83,000 consideration, right shares purchased. Understood? After this 15th of May, dividend at rupees 6 per share and it was received, but it is not on right issue and bonus issue. Why? This is for previous year 2020. We are in which year? Sir, we are also in 2020. This is 1920. We are in 2021. Sir, no sir, 2020 ಕೊಟ್ಟಿದ್ದಾರೆ 2020 ಅಂದ್ರೆ 2020-2021 year. They are talking about 2019-2020. So this is for the this is on the profits that is earned in 1920. Were we shareholders then? Some part yes, some part no. Why? Opening balance 8,000 is there. Usually you would have seen question with pre-acquisition dividend. or post acquisition dividend. Here partly pre, partly post. How many shares do you hold? Come here 8, 7, 6, 2100. But dividend will not be given on these two. Why? They were not born only last year. Correct or not? It's only given on this 8,000 and 7,000. Talking about not being born, our Telgi uncle was there. No, he was also caught like this only. He gave stamp papers for the date when he didn't even have license. Money. Pretty. 8,000 and 7,000. 15,000. On this 8,000 equity shares, 8 rupees per share, 6 rupees per share. 6 rupees. History. 6 rupees. That will be post acquisition. 8,000 into 6 is post. After we acquired, we got. 7,000 into 6 is pre-acquisition. Here people get confused. Sir, 8,000 is there from us before. So 8,000 is pre-acquisition. 7,000 we acquired after. 7,000 is post-acquisition. Post-acquisition andre angalla. After we acquired, like if for the dividend declaration period, if you already hold the share, it is post-acquisition. If the dividend is declared for a period before we acquired, it is pre-acquisition. When did we buy this 7,000 equity shares? 1/5/2020. Dividend is declared for 1920. So the dividend is declared out of the profits which was earned in the pre-acquisition period. So it is pre-acquisition dividend. Are you getting it? Okay. Now tell me, how much is pre-acquisition dividend? Don't have to tell the amount. What should I multiply with what? 7,000 multiplied by 6. Very good. That pre-acquisition dividend will decrease cost of investments. So I'll write here by bank account. I will write that to the extent of 7,000 into 6 in amount column. And on that opening balance 8,000 into 6 in dividend column. This is profit post acquisition. This is reduction in cost of investments pre acquisition. Aita. Next, shall I go to next adjustment? Okay. What is after? Doubt ama? 6 per share. Okay. 1st of December 2020. Sold 7,000 shares at 260 per share. Brokerage 1%. Sold 7,000 shares. Shall we write the entry for sold 7,000 shares? 1st of December 2020. Sale of how many shares? 7,000 equity shares. Tell me how much is sale price? 7,000 into 260. What do we get? 18,20,000. Now tell me how much is brokerage? 1%. Brokerage should be deducted from sale price, added to purchase price. 18,200. When you deduct, what do we get? 18,01,200 is the sale value, net consideration that we're getting. Okay. Now, what is the cost of this? We need to find. Which method are we following? Have they told anything in the question? No. What is the weighted average? If they don't give, we'll always follow weighted average. Why? Weighted average is easy. How do you find weighted average? Very simple. Very simple. Take all the totals. Amount column ತಗೊಳ್ಳಿ ಹೇಳ್ತೀನಿ. Take your calculator. 1520 plus 1626 100 plus 4,83,000. You added amount column these three items. Deduct pre-acquisition dividend of 42. What you got? No. That is a total value for all the shares together. How much did you get? M plus added to memory. Now we'll divide it by number of equity shares that we have. How many? 8,000 plus 7,000 plus 6,000 plus 2,100. ನಾನು ಅಷ್ಟೇ ಸೇಲ್ ಇಲ್ಲಪ್ಪ ಈಗ ಮಾಡ್ತಾ ಇದೀವಿ ಸೇಲಿನ ಎಷ್ಟು ಬಂತು 23,100 23,100 you remember MRC divided by 23,100 150 that you got. No, that is per share value. How many are you selling? By multiply by 7,000. I am finding, see here, cost of 23,100 shares is adding all of this 35,87,100 whatever you got. What is the cost of 7,000 shares? 35,87,100 into 7,000 divided by 23,100. What did you get? 10,87,000 is the cost. Selling price 18,01,800. Profit or loss? How much profit? 7,14,800. 7,14,800 should go to P&L account credit side. So in investment account debit side, I'll write 2 P&L. 2 P&L. 7,14,800. Sale consideration, I'll write on the credit side. By bank, 18,01,800. Sale of 7,000 equity. Class idella. Then interim dividend 3 rupees. Interim dividend you will get it on bonus shares, right shares, everything. Interim dividend 3, and this will write it to dividend column. On this date, 25th of January, how many shares do we have? 8 plus 7 plus 6 plus 2,100 minus 7,000. 16,000. That will write in demo amount column. 16,100 into number of shares into how much dividend? 3. Okay, now done. Then last we have shares are quoted in the market at 260. Yen madbeku? We'll compute the cost price. Compare whichever is less is what we'll take. Whichever is less is what we'll take. Investment should be valued at cost or market price. Whichever is less. Don't tell cost or NRV. NRV is for goods. For shares it is market value. Okay, chalo, let's take here. 1520 plus 1626 100 plus 4,83 plus 7,14,800 minus 42 minus 18,01,800. Almadi sir, Madri, do it please. Here if I do, I'll straight away show the answer. 15,20,000 plus 16,26,100 plus 4,83,000 plus 7,14,800 minus 42,000 minus 18,01,800. 43, 900 M plus. This is the total value. You should take number of shares. Getting it? How many shares? 80,000. Okay. Here 8 plus 7 15, 15 plus 6 21, 21 plus 2,100, 23,100 shares. In that 7,000 are sold. 23,100 minus 7,000, 16,000. 43, 900 you had, no, divided by 16,100 you will get per share price. Per share price 269. What is the market price? 260. Should value it at whichever is less. What is less? 260. So we'll take a number of shares, balance carried over. How much? 16,100 shares into 260. What do we get? Different Bharata. Hey, this is balancing figure. Balancing, that's rate correct at 269, whatever you told. Pakka. 269 Bharat alva, 259 alla tane. I am believing you people. I will do 16,100 into 260, 41,86,000. Now close the dividend column by transfer to P&L, close the amount column by transfer to P&L. That's it. Everyone, the question doesn't end here. That's it. They've asked us to do only this much. They've asked us to do only this much. Doubt idya? Doubt idya, ma'am? No. They've asked one more sub question, saying that how much of the profit should be transferred to P&L. You transfer no dividend column, interest column. Adella sersi on P&L account extract you prepare. Dividend income, interest income from bond, profit on sale of shares or loss on reduce the profit. Profit on sale of bonds and profit on sale of investments, and loss on revaluation. Loss on decrease in the value of the investment, because this is current investment. If it is non-current investment, would have recorded it at cost. Here they are telling suggest the value at which investment in equity shares should be reclassified in accordance with AS 30. They want to show it from current investment to non-current investment, long-term investment. Then what do we do? On the date when we are reclassifying it from current investment to non-current investment, we'll take the cost or fair market value, whichever is less. At that value, we will capitalize. What is the value? 180 rupees is the value at which it's quoted in the share market on 15th of May. We know it on 31st of March. After 31st of March, before 15th of May, is there any purchase? Is there any sale? Nothing. We have the 260 rupees per share as the value on what date? 31st of March. Assuming that there is no change, 260 will continue to be the value per share. But what is the fair market value as on the date of reclassification? 180. and 31st of March. This is on 15th of May. Divided by divided by 16,100 ಮಾಡಬೇಕು. ಹಂಗಾರೆ ಇದು ತಪ್ಪು ಹೇಳಿದ್ರೆ 250 lakh 100. This 41 lakh 86,000 is wrong. You done something wrong, guys. Take your calculator. Do 15 lakh 20,000 plus 16 lakh 26,100 minus ಮಾಡಕ್ ನಾನು ಹೇಳ್ದೆ 42 42 900 ಅಂತ ಸ್ಟೈಲ್ ಆಗಿ ಹೇಳ್ಬಿಟ್ಟು ಕುತ್ಕೊಂಡ್ಬಿಟ್ರಿ ನೀವು ತಗೊಂಡಿಲ್ವಾ? ಮೈನಸ್ ಮಾಡಿಲ್ಲ. ನಾನು ಹೇಳಿದ್ದೀನಿ 1520 plus 1626 100 plus 4,83,000 plus 7,14,800. 43 43 900 minus 42,000 minus 18 lakh 1,800. ಕಬ್ಬಿಗಳು ನೀವು ಮಾಡೇ ಇಲ್ಲ ಸರಿಯಾಗಿ. 2,50,100 is correct. 2,50,100 you got, no, divided by 16,100. Market price is 250 260. Which is less? The 250 100 only will take 160 na rate. 155 we'll take it 155 only, whichever is less. And reclassification date cost is how much? 155. Fair market value 260. Which is less? Cost 155. 155 is the cost per share, and then market price on 31st of March is 260. You will record it 155 or 260, whichever is less, which is 150 into 16,100 shares. You will take it at 25 lakh 100. Got it? This is on 31st of March. Till 15th of May, there is no other transactions. On 15th of May, fair market value is 180. Cost is 155, which is less. So when you capitalize this, when you treat it as a non-current investment, long-term investment, it will be shown at 25 lakh 100, 16,100 shares. And once you treat it as non-current investments, you will never compare at the end of the year to market price. It will be continue to shown at cost price unless such a decrease in the price of the share is permanent in nature. Got it? That's with regard to investment account. I hope you people understood. One, ಇಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಆಯ್ತು. ಏನ್ ಮಾಡೋದೀಗ? ಬ್ರೇಕಾ? ಲಾಂಗ್ ಲಂಚ್ ಬ್ರೇಕ್ ಆರ್ ಶಾರ್ಟ್ ಬ್ರೇಕ್? Let's do redemption of debentures. Ravi? Redemption of debentures and then incomplete records alva. Going ahead, it's soon. Your entire investment is 1 day. What does that mean? How do you know? So usually 5-marker questions, but there are times where a 10-marker question has also come from this chapter. Last 2 attempts ka marks have not updated. Let's quickly see. Debenture is an acknowledgement of debt. It is secured. It will have floating charge on the assets. All of that things you know. And let's quickly discuss about the topic of DRR. So DRR is a mandatory thing. It should be maintained to ensure that whenever the company wants to redeem debentures and then pay the money to debenture holders, there is enough money. So company has to create debenture trust. There should be debenture trustee, and certain investments should be made as DRR investments. To be made in risk-free form, meaning this will not be subject to market risks. It's again conditional. There are certain exceptions going beyond which you can invest in little risky investments being given there. But otherwise, we need to invest in the risk-free investments. And let me quickly go ahead and then talk to you people about how to create DRR investment. Whenever debentures are issued, we write the entry bank to debentures. No? Whenever we do that, if these debentures are supposed to be redeemed at premium, such premium also should be provided for in the beginning only, because such redemption premium that we pay on debentures is compensation for interest. If the company cannot pay higher interest rate as per market, let's say in the market every debenture is traded at 12%. Because of some condition, I cannot afford to pay 12% interest annually. I would say I will pay you 10% rupee, 10% interest, but I'll redeem your debenture at 20% premium or 10% premium at the end. This is because I don't have to immediately pay you cash. I can pay it later. So if in case I take that, such an amount of premium that should be paid on redemption is compensation to interest. And such an amount should not be recognized in the last year, should be recognized over the period of debenture. How do we recognize it? It is dependent upon the debenture redemption schedule. If the debentures outstanding are constant throughout the debenture period, meaning all the debentures are redeemed at the end, then you transfer equal amount, because outstanding debentures at the beginning of each year is same. So you transfer equal amount of that loss on issue of debentures to P&L. If in case the certain percentage of debentures are redeemed at the end of each year, we identify the outstanding debenture ratio, and in this proportion will go on transferring it to P&L account. And this provision need not be made just for premium on redemption, but should also be made for the discount on issue of debentures. That's what we call together loss on issue of debentures. And on redemption, if the premium is not created, premium provision is not created, but still the debentures have to be redeemed at premium, we will do it all in the last year. This might happen in a case where there was no promise of paying premium in the beginning, but towards the end they've agreed to pay premium. The entire premium will be made in the last year itself as promise. So you write the debenture account as debit and then credit debenture holder account, because you need to redeem the debenture. If in case you need to pay premium, you will debit that provision. If it's already created, that would be available as credit. No, you debit that. If not, write provision now and then transfer to debenture holder account. From debenture holder account, you end up paying them. So if there is premium, like I mentioned, debenture account debit, premium account debit to debenture holder, and debenture holder account debit to bank for payment. Debenture redemption at discount is very remotely possible. Theoretically, though, will not be there unless the company is going to insolvency or bankruptcy. But I would say in the journal interviews, we'll still learn it. Such an amount of discount on redemption of debentures is profit to the entity, and we're going to credit it. And you should not book this in prior. Why? Conservatism. It is against conservative approach. You get this? So we'll go on booking this. And whenever you do this, to pay this money, to debenture holder, he will dispose DRR investments. Will dispose DRR investments. So at the time of issue of debentures, at frequent intervals, whenever the company has to go for dividend, whenever company expands or does something, it has to transfer proportionate amount of money, certain percentage of amount of money to DRR investments. It is very simple. It's like same thing. You create DRR. It is part of profit which will be specifically classified to a reserve called as DRR. If you don't classify it to DRR, what happens is all the profit that is earned by the company might be used for capitalization of reserves, might be used to redeem preference shares at premium, might be used to declare dividend to equity shareholders. When there is nice profit, people with voting power, equity shares will take dividend, equity shareholders will take bonus issue. To keep the preference shareholders quiet, they'll give them what do you say, a higher rate of dividend, or they'll give them premium or redemption. If they do that, no, where will debenture holders go? There won't be any money left for them to be repaid, no. So what we do is certain percentage of money will be transferred from profit and loss account to DRR account. It is appropriation of reserve. We'll debit profit and loss account, credit DRR. We debit profit and loss account and credit DRR. This is transfer of profit to DRR. Whenever we do this, same amount of money what is transferred from P&L to DRR will be taken out from our cash balance and invested in DRR investments. It is like purchase of any other investments. We'll write DRR investment account debit to cash. And this is done at several intervals. And on the maturity date, when the debentures are to be redeemed, we sell DRR investments. We'll write cash account debit to DRR investments. If there is any profit earned, it will not be transferred to P&L. You can write it to DRR account only. Like you do your sinking fund, you write it to that account only. And such money will be used. And during the year, any interest received, it is completely dependent upon case to case in the company. Such interest can be reinvested in DRR investments only. So what they do, such interest, what is received in such cases where it has to be reinvested, will not be transferred to P&L. We'll write cash account debit to interest, interest account debit to P&L bariyalla, interest account debit to DRR account. Cash account debit to interest. We'll not write interest to P&L, we'll write interest to DRR. Are you getting it? That cash what is received will be DRR investment to cash. You get it? So cash will be received. It will not go to P&L. Profit will go to DRR. Cash will go to DRR investment. So at any given point of time, DRR investments and DRR both will be same. Reserve and investment will be matching. Are you getting it? That investments will be treated like any other current investment. If debentures are to be redeemed over a period longer than for 4 years, 5 years will be there, no, then that will be non-current investment. Non-current investments will not revalue it at the end of every year. However, if it is current investment and you see cost or market price, whichever is less, you do revaluation. We did in one of the questions that was transferred to P&L. So we discussed in one of the questions. We transfer the differentiation to P&L. Here we should not do. It goes to DRR. Just to ensure that debenture redemption reserve and debenture redemption reserve investments will be on par on any given. The questions become really very interesting when a company has to buy these DRR investments, no? So they can buy bonds of some company, they can buy treasury bills, they can use government securities, all of this. The company might see a potential point where the rate of interest what the company is paying to debenture holders is much more than what's there in the market. And people are not noticing it. Price is not high in the market. So no, what does the company do in that case? Company feels like redeeming the debentures. Now only. But our company has huge cash surplus. They can redeem the debentures. They want to redeem the debentures, but they will not be able to in certain cases. Why? Debentures will be issued for a minimum period of 5 years. 5 years is not over. You cannot redeem. So what do they do in that case? That case, from the open market, company will buy its own debentures. Instead of raising DRR fund and investing in some other company, company will buy its own debentures. Actually, when it buys its own debentures, you know what's happening? It is giving loan to itself. It is giving loan to itself. It is like redemption of preference share. It is like buyback of equity share. But redemption of preference share and equity share buyback, we immediately reduce it from the share capital. Here you can't. You will hold it till a certain date because of some legal restrictions saying that you cannot cancel out the debentures. You should hold it for minimum 5 periods. Such criteria if it is there. If that criteria is fulfilled, company can go for immediate cancellation. In certain cases, company when it reacquires that debentures, they'll tell we'll accumulate it for next 1.5 years. After this 2 years period, we will cancel it. Till that day, in the balance sheet of the company, asset side we have DRR investments, which is its own debentures. Liability side it has debentures, its own liability. So it is given loan to itself, and on these debentures they'll give interest. That they will give usually on these debentures they'll give interest. They might have to give some portion of interest to themselves. They might have to give some portion of interest to themselves. So on this total debentures, what is there in the balance sheet, we compute interest. But when we write to cash, you should be cautious. To the extent we have, we will not pay cash. Why? If we pay cash, such money will come back to us only. If we write to cash, interest account debit to cash, then again if you write cash account debit to interest and then book that as income. Are you getting it? You won't pay interest, do TDS and then receive interest and then file income tax and claim refund. No, what nonsense are you trying? So such an amount of interest, whenever there is investment in own debentures, compute interest, write the payable entry. When you're writing payment entry, check how much is own debentures pay interest. To the extent it's own debentures interest, we won't write to cash. That will be written in investment account in the interest column only and then adjust it. That own debentures, no, forget everything else, do it exactly like how you do for any other interest, any other investment. Any other investment, how do? You do the same thing. Whereas when you write interest column, whenever you write the amount in investment accounting, you write buy bank, buy bank, buy bank, buy bank. Don't write buy bank there. right? By debenture interest. By debenture interest. Usually we write no debenture interest account debit to cash for payment. Here we will write debenture interest account debit to cash to own debentures or to interest. It will get adjusted there in the interest column. Interest on own debentures. You open one dummy ledger. What is it called? Interest on own debentures. Interest on own debentures is income account. Debenture interest is expense account. When you write debenture interest account debit, write full outstanding debentures pay interest. Credit cash to the extent outsiders sold. Credit interest on own debentures account to the extent PU. In debenture interest account, write to cash for outsiders, to interest on own debentures for own debentures. In own debentures ledger, investment account, credit side, don't write by bank, write by debenture interest and write such amount in the amount column. And that will decrease the cost of the investments if you have bought it, come interest. You could have bought it, come interest. One fine day when you close it, close that debenture column, own debenture amount column, you close it and transfer to our investment column. Sorry, our debenture column, or close the debenture account mein whatever amount is there nominal value to here. Any difference arising, this is asset, own debenture is asset, debenture is liability. Difference arising can become profit or loss on cancellation. Profit or loss on, and that should be transferred to P&L. You can transfer from there to here or here to there. My recommendation, close your own debenture account. Whatever total amount is there, you write it to debenture account. In own debenture account, you'll have debit balance. Debit side will be more, credit side is less. Amount column balancing figure, what you write on the credit side, you'll write by debenture account. Sorry, we'll write by X% debenture. Am I right? In your debenture account, you'll write it as to own debentures account. And outer column, you keep remembering the nominal value. Difference will be profit or loss. If it is loss, it will be on the credit side in debenture account. If it is profit, it will be on the debit side in debenture account. Because in P&L, it will appear on the credit. Are you getting it? So this is one point that you should be little cautious. Have a look at this. Purchase in the open market. So for immediate cancellation or as an investment. When do we immediately cancel? When that minimum period of 5 years or something is over, you buy it, same day you cancel. Then the interest on own debenture problem is not there. When you're holding it is an investment till a specific date and then you are canceling it, then interest on own debenture will come and you would have to be little cautious on. Got that? Then remember that. Purchase of own debentures. What is the entry? Own debenture account debit because it is asset. If this is cumulative of interest price, we need to compute the interest separately and then debit interest. If in case this is X interest price, write the price given in the question, separately compute the interest and then write. If it is X interest, what price they give, straight away debit it to own debenture. If they give come interest price, compute interest accrued till that date. That is done on the nominal value multiplied by debenture percentage multiplied by last date of interest till the date of purchase. Such an amount you deduct it from the come interest price, write the interest to debenture interest account, debit will be X interest, that is cumulative of interest price minus credit bank will be the total amount paid. Understood? When you're cancelling it, like I mentioned, debenture is a liability that will decrease. Debit debenture account, credit own debenture account. Own debenture is asset decreasing, credit, and debenture is liability decreasing, debit. So here you write face value, here you will write the book value, balancing figure in own debenture account. When you find that value, whatever is the balancing figure is profit or. Understood this? If it is held as investment and cancelled later, this entry is same. This entry is, this is the point where I was telling. Whenever interest has to be paid, we write debenture interest account debit because debenture is our expense. To outsiders, we write to bank because it is paid. To the extent it is our own debenture part, we'll write to interest on own debentures. Some of them do this slightly differently. They don't compute interest on own debentures. They'll compute only on outside debentures and write debentures interest account debit to bank. This will become little too nonsense. Please don't do that. Just take nominal value of debentures on the liability side of balance sheet, compute full debenture interest. To bank, you do it only for the outside debentures. To the extent it is inside debentures, you need to write it in the interest column. Please do that. And when debentures are cancelled, again same entry. There's going to be no change. And DRR, I thought, whenever DRR is created, entry is P&L to DRR. When investments are bought, DRR investment to bank or cash. When interest is received, bank to interest to P&L. Considering the fact that interest is received is through cash and it should not be reinvested. Sir, should it be reinvested or not reinvested? See, that we don't know. That they would have to tell. If they tell, based on that we do. That is not a what to say, point given by law or statute. That is company based. It's company's policy. It is when debenture trust is created, whatever they agreed upon to do with the interest amount. Will it be reinvested or will it not be reinvested? Certain cases may huge amount will be created as DRR, and investment return what they get no from DRR will be compensating slightly to the DR or say debenture interest that we're paying. Might sound illogical. It's like you take loan from someone, invest it somewhere, from that interest you'll give this interest. Angalla, but to an extent, to safeguard the debenture interest to a small extent, company will do this. Are you getting this? That way DRR is completely questionable. Why? You took loan from somebody. To repay the loan, you are asking the person who's taken the loan to invest it in something. Then when will you do business? You agree with me? It is questionable. So it's not the entire amount of debenture. It's like small portion of the investment. So what is more logical is reinvestment only, not using it. But however, that will leave it to the question. When we sell DRR investments, entry is bank to DRR investment, and then we are supposed to pay the money to debentures, debenture to debenture holder to bank, and then excess money remaining in DRR will be transferred to general reserve. Don't transfer to P&L. Why? It is not current year profit. From the previous year profits, we have appropriated it and transferred to DRR. If we had not transferred to DRR in the previous years, it would have gone to accumulated profits, P&L credit balance or general reserve. If we transfer to P&L account now, it will become pre-operated. Don't do that. Transfer it to general reserve. And if there is any convertible debentures on that specific date when it is eligible to become equity shares, write the nominal value of equity shares in it. If the balance portion is paid in cash, we'll write cash. If not, that will become premium on conversion of debentures to cash. The questions will become interesting when there is an option given to the debenture holder to either convert it to equity share or take cash, and some percentage of them convert to equity share and some percentage of them take cash. Please don't straight away start with journal entries, no matter how confident you are. Write outside what is the nominal value. They can also mention premium on redemption, not premium on issue of equity share. There can be premium on redemption also. Write that and then split that amount 60-40, 30-70, 50-50. You write it. Sometimes they'll give percentage, sometimes they'll give this many number of shareholders agreed for cash. So once you split, you write how much ever cash they're taking, how much ever equity shares is to be given. Don't straight away debenture to equity share capital. Transfer debenture to debenture holder. If there is premium on redemption, add that premium. I'm going to say debenture account debit, premium account debit to debenture holder. That debenture holder account, whatever you credit, no, that amount you should split into equity share and cash. Don't transfer the nominal value of debentures. If there is premium on redemption of debentures, first add that premium, identify the amount payable to debenture holder, that you split based on the percentage or data given. Then you write the entry debenture holder account debit to cash or debenture holder account debit to equity share to security premium if that's there. Are you getting that? Yeah, be little cautious when you're doing the to security premium part. There can be security premium. Got it? So this is a quick revision of the entire debenture topic. Yeah, I agree. The question will become tricky in two cases: when there is own debenture plus interest, and the next one is when debentures are getting converted to equity shares and the premium is involved. So these two varieties may please do solve 1-2 problems and you will be fine with it. Don't stress too much on the part where DRR should be created, DRR investment. That is nonsense. That's not the kind of questions. The entire chapter lies around the fact where DRR investments is invested, interest is received on this, own debenture ledger should be made, cancellation and decreasing from debentures. And the second kind of questions is conversion of debentures to equity shares with premium based questions. If you can do that, good. Don't waste time in doing this cash account debit to, sorry, DRR investment account debit to cash to P&L account debit to DRR 25%, 30%, 10%, 15%. Don't waste time there. That's not the point where you should your energy should go. That percentage is not too much of nonsense. Don't spend energy and time there. That you don't focus much. Try and focus on the later part of the chapter. Usually people find this chapter annoying because of that and they ignore the rest of the chapter, which is important also. So I'll show you the past examination questions. See here, exam paper November 19. Is it based on that percentage? No. See here, premium on redemption to convert 20%. I told you, conversion of debenture to this one. 20% holders agreed to convert their equity, convert it to equity shares at 5% premium. Rest of them to cash. That question. See, this is another exam question. November 18. So this is based on where investment is made in DRR investments. And after 6 months, company gave notice they are selling. So that government loan will be sold using DRR investment received money. You are paying the money to debenture holder. This is again not based on that 5%, 10% listed, unlisted. It's not on that. Again, Gurudev, have a look at this. Again, you purchase some DRR investments. No, you purchase some own investments, own debentures. 98 rupees ex interest, 98 rupees come interest. You just have to prepare that ledger for this. And oh, this is actually right issue question. No. Immediate cancellation. Yeah. Own debentures. Then own debentures, immediate cancellation is so much easier than holding it till the later date. Then one more examination question in the last attempts. The last two attempts also, you see, you never got that. What we are talking about now, what annoys you? I understand what annoys you. 10% maintain ಮಾಡಬೇಕು, 15% maintain ಮಾಡಬೇಕು. It is listed when it is. That is not what is going to be questioned. Question basically comes around this topic. That you see it once. I'm not denying. I'm not saying you don't see that. But don't spend too much time on that, and let that not be the only part that you see, and then let that not be the only part because of which you will skip that chapter. Doable chapter again. Got it? Yeah. Last incomplete record, Sam. Can I say this is done? Tell me, is there any part of this chapter that's bothering you, annoys you, which makes you feel little uncomfortable? Please do tell me. I'll help. Entire chapter. Too late for me to try and entire chapter. 3-4 days, so we'll take 15-20 hours, so we'll take 15-20 hours, will take 4 days is minimum to do all varieties of questions. 3 days, ಎಷ್ಟು fast ಮಾಡಿದ್ರು 3 days, 15 hours is minimum. Sorry. Too late for me to help. Incomplete records. Shall we start with incomplete records? Very good. Incomplete records. No. There are two kinds of problems or two things that you need to note. What are the two things that you need to note? Records are maintained in unsystematic, unscientific method and not complying with double entry system. We need to evaluate their financial performance and position to help them in decision making. So what do we do to help them? There are two options. Option number one, just survive. Let that be in single entry only. Don't convert it to double entry. Do one adjustment table which looks like balance sheet. Do one adjustment table which looks like P&L. Just to compute some balance sheet numbers, some P&L numbers. Based on that, you take decision. That is statement of affairs. Second method is where you convert complete single entry system records to double entry system record. You convert single entry to double entry. Single entry to double entry conversion will take time, will take efforts, will take identification of all the transactions, rectification of all the errors. So obviously we'll charge more. You need to prepare all the journal entries, ledger, trial balance, and then do. We straight away will do ledger accounts and then we'll do balance sheet period. However, under statement of affairs method, which is a simple shortcut method, what we do is all the assets and all the liabilities, we'll try to find the value. Assets, we have the land, we have building. Last year financial statements are there. We'll take the last year financial statement value. If depreciation has to be done, we'll do depreciation. Debtors are there. We'll call them and ask how much money do I owe you. Or we would have maintained some sale records, some purchase records, some payable records, and some receivables will be there. Based on that, we'll identify debtors value, creditors value, how much to pay, how much to receive. Cash balance will know, bank balance will know, inventory will value. So we'll find the value of all the assets. We'll find the amount of liabilities that we need to pay, liabilities. Similarly, last year we have done. Last year balance sheet is available. In the current year, when you do this, you will get capital as balancing figure. You will find balancing figure in balance sheet. So you won't call it balance sheet. We'll call it statement of affairs. What do you call it? You don't have to prepare any ledger. Last year asset value minus depreciation. Debtors, they will give this much, write that much. Cash, they'll give that much, right? Bank, write that much. Straight away, you'll write. Or you would have maintained some record, some cash book, some passbook, or some record of purchase, some record of sales. So based on purchase sale record, you'll identify how much money is still payable or still receivable. You identified current year capital. You know last year capital. From last year to this year, capital when it is changing, why will it change? Additional capital, drawings, interest on capital, interest on drawings, and profit. So if we take last year's capital, that is our opening capital, add additional capital, deduct drawings, add profit, you should get current year capital, closing capital. Am I right? We know last year capital. We know additional capital that we got. We know drawings. We know closing capital. We find profit as balance and figure. So we prepare one statement, not account. We prepare one statement of profit or loss. There is no income, expense, debit, credit. We take closing capital minus opening. minus additional plus drawings. That will give us profit. If there is interest on drawings, interest on capital on, we'll get profit as balancing figure. You get this? This is just survival. This is statement of affairs. Under conversion of single entry to double entry, what do? We identify each transaction. Think of it, whether it is say asset, liability, expense, income, and think of the item whether it is capital or revenue in nature. If it is revenue, expense, P&L account debit. If it is revenue, income, P&L account credit. If it is capital item with debit balance, balance sheet asset. If it is capital item with credit balance, balance sheet liability. Create all of it, identify GP in trading account, post it to P&L account, find NP, add it to capital, and then prepare. There we'll have ledger account for every single item that we need. That's a detailed completion of single entry to double entry. So if in case they give question on conversion of single entry to double entry, we'll do it completely. If they say the logic of statement of affairs, this is what we're going to do to determine our profit. So this is how we determine profit. Closing capital minus additional capital plus drawings minus opening capital will give us profit. How do we get closing capital? By preparation of balance sheet of current year. We won't call it balance sheet, we'll call it statement of affairs. Are you understanding it? Every asset in the statement of affairs balance a previous year balance plus or minus some change. They will tell what is the change. They would have given last year. This is the easy part. You get this? So certain questions I marked practice. So one is partnership based question. Other one is one more question where 5-6 years data was missing, and they'll tell in between he bought one car, he bought one building. In the beginning he had borrowed money from his brother. At the end he had given money to his brother. One Rajinikanth movie type they'll show. He was a beggar and he became a hero. Yeah, they show that. Say there's a question like that. 7 years. Income tax officer somewhere feels like this guy has done something wrong. So he's asked our suggestion. Do we prepare 7 years statement of affairs? No. Beginning of the first year, one statement of affairs. End of 7th year, one statement of affairs. Together, capital difference, one statement of profit or loss, total profit. 7 years profits they've given individually. Add, compare. We'll give our suggestion to income tax officer whether he's a good boy or a bad boy. Undisclosed, no, under disclosed income. Income is disclosed, but we don't know. We will check and tell whether full amount of income is disclosed or okay. So that's one set of questions, and that one question please do try. I'll tell you the number. Lokesh, Lokesh, Tar or Tama, fourth one. That is also possible. See, there is one partnership question. Partnership question, you might find it difficult. I'll tell you why do you find it difficult. So what do? You take closing statement of affairs. There you find capital. You will prepare opening statement of affairs. There you have capital. Difference between these two capitals is profit. Am I right? The place where you get stuck is once you find profit, you should segregate between both the partners. Then you will find closing capital. Correct or not? So to find closing capital, you need profit. To find profit, you need to take closing capital and compare it with opening capital. You're stuck in loop. That is the bothering part. Don't do it individual partner wise. Take the total. A, B, C is there. C retires and A and B continues. So A, B and C together total capital is there. They've told after retirement capital will be still same. So don't take A, B, C separately. A, B, C together total capital you take. Total additional capital you take. You find total profit. Then you split it so that their capitals will be still in ratio. Understood? Very easy. Only thing that you should remember is don't try to identify the profit partner wise. Try to identify it total. This is that Lokesh question. Number 4. Thar, Asgard, brother, Lokesa. So fifth one is partnership. One is partnership. That's your favorite question. See here. We'll try and do closing capital in total, not individually. We'll take opening capital also in total, not individually. Find the profit in total. Then split that profit for 3 months, 9 months. 3 months where all the partners or A and B were there. 9 months where 3 partners come. Then you split it between them and then you add it, you will get it. Not very difficult. You just see it once more. But understood, no? Don't try to identify the profit partner wise in the beginning. Take total capitals and then find the total profit. Then split that profit into 3 and 9. 3 months you share it to A and B because first 3 months only A and B are partner. Remaining 9 months A, B, C will become partner. So that money you share it between all the 3 partners in their profit sharing ratio. Take it back to capital, it will be same. But that's with regard to statement of affairs. When you come to conversion of single entry to double entry, it's just purely about your logic in debit, credit, and account. Every item which is repeated more than once in the question, please do prepare ledger account. All the ledger balances, when you close it, if it is nominal balances, it will go to P&L. If it is personal account or real account, you post it to balance sheet. Follow double entry system there. Treat it more like your final accounts in CA foundation than treating it like a CA inter chapter. The reason why this chapter was done at the end, or I consider this to be an easier chapter, is ICA also thinks that this is a chapter which doesn't deserve to be at CA inter. This will go to CA foundation in the coming attempt. This chapter will go to CA foundation in the coming attempt. Now, in the month of June 2024, when the exam happens, people will write this at CA foundation level. Are you getting it? Then basic concepts is tested in conversion of single entry, double entry, cost, on profit, accrual basis, prepaid outstanding, accrued income, pre-received income. All these adjustments all by itself. Depreciation, provision for doubtful debts, bad debts is there, provision is there, provision written off, additionally provision create. All just got that. So any specific doubt that you people do have on this topic which you want me to touch upon? No. Okay. That's it, guys. I hope it was helpful. Was it? Did you guys learn anything new? People who are watching it online, you can go to check all the files that we mentioned in the class to see in the description to this video. Please do share this video among the friends whom you think you can help, considering this to be the very last attempt of the intermediate examination. And like I mentioned, insurance claim. Insurance claim, redemption of preference shares, bonus issue. There's another separate video also. And one topic for which I told you discuss separately. Departmental accounting is another video. You can just search for CA Rajavardhan or accountsman and then departmental stock account. You'll get that video. You can do watch that video on memorandum stock and markup markdown concept in this specific chapter. Got it? So the intention of this entire sessions was to make you people understand that you can sit for 10 hours, you can sit for 8 hours. I'm not telling you that you sit for 8 hours and you understand everything. If some idiot is talking and he can make you sit for 8 hours straight, for the idiot inside you to become a smart person, can't you sit for 8 hours, 10 hours? See, you didn't have to wake up at 6 o'clock. You didn't have to stay awake till 12 o'clock. In spite of that, you people clocked 9 o'clock to 5 o'clock easily about 7 hours, 8 hours straight sitting. Are you getting it? Considering the travel of 2 hours, but 1.5 hour in between breaks and everything. So and it is little too difficult to sit and listen to somebody talking without you writing. I didn't make you write anything the last 2 days. So if you can do that, just because someone else is talking, so if your mind is talking too loud, can't you sit for 8 hours, 10 hours and everything coming for the next coming 20-25 days? So sit there. See, I find it difficult to sit, but I'm sitting now. What will happen? Nobody ever died because they were sitting for so long. I just want to say this student was sitting and studying for CA intermediate exam and suddenly died. No, that will not happen. So only thing that I used to feel when I used to study for exam, I have this very they say ADHD, almost similar kind of yeah, hyperactive or attention deficiency syndrome, similar problem or almost same problem. I find it very difficult. I get bored like this. I can't sit for longer hours. So you understand that CA examination is very demanding. You need to focus, you need to sit for longer hours. If not, you won't be able to crack. So one simple thing that I used to tell myself whenever I used to study for my examination is I can get up now because I'm like anything other than this is nice for me now. So I just want to close my book and then just get up and go. Are you getting it? Why I don't want to study for next 30 days? It's very irritating. If I do that, I might enjoy next 30 days. Actually, you don't. But let's say, assume that you enjoy that 30 days because anything other than this is fine. You have to again sit for 6 months. So the easier option is actually not to get up, go. Easier option is actually sit, finish it, and then get up. Are you getting it? So I didn't get a possible nice sleep yesterday, day before, because this is not done. Once when my work is done is where I'll feel pleasant. And right now you might be feeling very chaotic in your mind, but trust me, the immense peace that you get last day of your examination when you come out of it is definitely worth all of it. Feel like you've just been born again the last day of your exam. Just let that be the thing that will push you hard to study really well. Sit there, clock those 10 hours, clock those 12 hours, clock those 14 hours. Don't be ever comparing as to how many hours someone else would be studying. Do as much as you can, and then every minute of effort that you put in this next 30 days will pay off. You will be very thankful to yourself for doing this course in such a way that either you will be happy and thankful to your effort, or you will be sad and regretting to your effort. You are never like, I'm neither happy nor sad, I'm just fine. That just fine is never there in the course. You are happy because you cleared, or you're sad because you didn't clear. You're never like, okay, I'm happy we got me getting 92. See, I put in so much effort only, I got so much marks only. You'll never find an SCA student saying. So we are not meant to be mediocre. We never settle for medium things. We want bigger things, and that's the reason. That's one of the reason why any one of you sitting here would have taken this course of chart. Remember the promise that you made to yourself when you took up this course. Remember the people who told you you can't when you took up this course. You have a bigger message to give. You have a bigger purpose to fulfill. You have to do it for you. Got that? That's it, guys. On this thought, I would want to wind up this session for all of you people. Did you learn anything new in these 2-3 days? You guys had a little fun in these 2-3 days. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either you stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So, thumb rule to stay happy is pretty simple. It is to stay in the game. So, one last time on this day, I have just one simple question for all of you. Are we in the game? Are we in the game? Come on to the top of your voice. Are we in the game? That's it, guys. Now, bye bye. Take care. See you all in a different place until later.